It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ solidly in the green. Some calm, relative calm, returning to U.S. financial markets after Friday's rout. We've got the S&P now up 61, back at 6,038, higher by 1%. The Dow up 381. A lot of green today, up 0.9%. The NASDAQ Composite Index now higher by 302 points, up 1.6%. And a broad-based rally with the Russell 2000 Index of small cap shares up 1.3%. The 10-year ahead of a Fed decision Wednesday at 4.44%. The 2-year 3.96%. Gold down $39 the ounce, lower by 1.1%, $33.93. And West Texas Intermediate crude down 1.5%, $71.89 a barrel on WTI. London-based Entain shares have jumped to the most in more than 3.5 years after the sports betting and gaming group upgraded its full-year revenue guidance for BetMGM. That is the U.S.-based joint venture. It shares with MGM Resorts International. Shares of Entain in London up by 15.2%. MGM now higher by 8.6%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Many thanks, Charlie, for your read on the markets. We do it every day with Charlie Pellet here on the fastest show in politics. Thanks for joining us on Bloomberg TV, on Bloomberg Radio, Bloomberg Originals, and on YouTube, where you can always find us by searching Bloomberg Business News Live. It is pretty remarkable. Stocks up, VIX down, oil down. Doesn't sound like a world in which we're on the precipice of a global conflict breaking out in the Middle East. Unless Charlie Pellet is whistling past the graveyard here, we have a pretty decent market on our hands after 4 days of attacks between Israel and Iran. I want to spend some time with Christine Aquino, who covers the markets for us. Bloomberg's managing editor for Markets, live with us on Bloomberg. Christine, thanks so much for joining from New York. Why do investors seem so confident? Is it just a matter of one headline that Iran is looking for an off-ramp?
Well, Joe, you know, the history of markets is that they are notoriously bad at pricing geopolitical risk. And, you know, the same goes for what we're seeing now in this latest bout of the Middle East conflict. We did see that initial knee-jerk negative reaction on Friday when news of Israel's initial strike against Iran emerged. And, you know, since over the weekend, we have seen investors being willing to recalibrate their appetite for risk. And clearly that's leaning more toward the risk positive side of things. I mean, there's definitely the headline that Iran is potentially willing to de-escalate, helping sentiment a little bit, but more broadly, you know, there is still this very bullish sentiment in markets, particularly in stocks.
Well, I guess this can take on a life of its own, but what are you looking at? What sectors are powering this higher?
Well, Joe, you know, we're seeing the traditional sectors, semiconductors, definitely one of the sectors that are powering this rally. You're talking about your Magnificent Seven stocks, your big tech, and that tends to be what we see, you know, during the times of a rebound in markets, all these mega cap stocks that tend to get battered when risk sentiment pulls back. They're the ones that lead a rally right out of the gate when we're starting the week on a more positive note like this. The other thing I would think to keep watch on is the dollar, because, you know, its relationship with risk aversion really has been shifting a lot. You know, gone are the days when the dollar is an ultimate gain or an automatic gain because of risk aversion. It seems like it's more responding to developments domestically, particularly as we have the Federal Reserve decision later this week.
Really interesting to see most of the big defense names coming back down to earth after the big rally we saw last week. Lockheed, Northrop, L3, all down 3% or more at this stage of the game, which we'll be following for you here. Christine, it's great to have you. We appreciate your read on the markets. Come see us again here on Balance of Power. Live from New York, Christine Aquino from our markets team. I'm Joe Matthew in Washington as we zero in a little bit more closely on energy and more specifically oil. We're, as I mentioned, looking at lower prices today. That goes for WTI and that goes for Brent. Down about 1.5% each, following a little bit of an uptick last week, a more severe uptick right at the outset of Israel's attack on Iran. We can't have this conversation without Bob McNally. I've been looking forward to doing this for a couple of days here to get his read, the founder and president, Rapidan Energy Group, former White House energy advisor in the George W. Bush administration. Bob, welcome back. It's great to see you. Should this market be more concerned?
Great to be with you, Joe. You know, I think it should, but you know what? You have to cut it some slack. We have a pattern here where we've had scary geopolitical disruption events going back to September of 2019 when the Iranians hit the Saudi Abqaiq stabilization plant, most important oil facility in the world, had the biggest open in Sunday and for crude oil markets ever, but it didn't last. The Iranians chose to inflict light reversible damage. Russian invasion of Ukraine, crude prices spiked, ended up being a nothing burger. We've had the Houthis disrupt Bab el-Mandab, hasn't roiled global oil markets. And Israel and Iran have come to blows twice last year, and now, and we still see oil flowing through Hormuz and being produced. So it's understandable why the market would say, boy, you cried wolf. I've seen this movie before.
Call me back when something changes. What if Iran does close the Strait of Hormuz? We keep hearing this. Is that the worst case scenario for the oil market?
It's right up there. In my view, the worst case is a damaging attack on the Abqaiq stabilization plant. There is no more important and valuable piece of real estate on planet Earth. One facility stabilizes and controls about 7 million barrels a day of Saudi production. The Iranians hit it once just to show that they could. They didn't do damage. If they went back and destroyed that facility, Joe, we'd be in a depression. Oil would go to 150 in a week and then down to 20, and it would be really the end of the world as we know it. At 7% of world oil supply gone. Now, Strait of Hormuz is 18 million barrels a day, about 5 million barrels a day of product, 13 million barrels a day of crude. Not a lot of redirects. You can put a little bit out through Yanbu and the Red Sea and a little bit out through UAE, through Habshan, but basically you're losing 15, 14 million barrels a day. Our strategic stocks can't cover that. Even if they were full, they couldn't cover that. So yeah, that's right up there as the second worst, I would think.
Neither of these appear to be expected by this market. It gets back to the boy who cried wolf. To your point here, we had Ron Dermer on the program at the top of the hour, Minister for Strategic Affairs in Israel, and he's talking a tough game. They're not done. They're not near being done, according to Ron Dermer, who talked about not only eliminating the nuclear threat, but the ballistic missile threat. That's going to require a lot more sorties and could potentially change the nuances of this conflict. Short of the worst case scenarios you're mapping out, what else should we have our eyes on?
Well, you know, Israel's a changed country after 10/7/23. And the plan was always Gaza, Lebanon, and then Iran. And we're into the Iran phase. And I think they're even hinting at regime destabilization, if not destruction. They're emptying Tehran, et cetera. So Israel is not going to stop until it achieves its objectives, at the very least neutralizing nuclear facilities, ballistic missiles, and possibly destabilizing that regime. And I don't believe President Trump is going to stop Israel from doing that. So I would think that Iran has to play the only card it has. It doesn't have military escalation dominance with us or with Israel. The only card Iran has is to threaten the thing that scares President Trump perhaps the most, and that is $5 gasoline here. And so whether
it could make that happen,
it can make that happen. And this debate is out there. We shouldn't expect, if the United States were to become militarily engaged against Iran, or Iran were to try to close the straits, it wouldn't be like the first Gulf War or the second Gulf War, where the U.S. prevailed militarily in hours to days. No, it would not be a cakewalk. Look at the Houthis, who are inferior to Iran, yet they are keeping us at bay. Iran is able to shut that strait for some period of time, a lot longer than the market thinks. So I think they may have to demonstrate that they're willing to do that, to get this crude price back up, to try to convince President Trump to rein in the Israelis. In a way, it's the only card they have.
Fascinating. You've been preparing for this moment probably for a long time as somebody in the oil space. What's different about Iran and its standing in the oil market, its importance and scale in the oil market now, than say back in the 1970s when an embargo had such an impact on our lives?
Yeah, you know, back in the 1970s, especially the early 1970s, the United States was the Saudi Arabia, the swing producer, the spare capacity holder of oil. Going back a little earlier, late 1960s, Arab-Israeli war, Arab oil embargo didn't matter because the United States had a safe, ample buffer in spare. But as we went through the 1970s, that went over to OPEC, and the United States lost control. And here we are with a 100 million barrel a day market with maybe 3-4 million barrels a day of spare, and all of the spare is in the war zone in the Arabian Gulf.
Okay.
So we're in a pickle, and the world's in a pickle. And what I think people may not realize, in the 70s, the United States knew we were vulnerable because we were losing control. The imports were rising. What people may think now is because of shale oil, because the U.S. is a net oil exporter. I hear this all the time.
Yep.
We don't need the Middle East.
Yes.
We don't need the oil. Yes, we do, because the price of oil is what we really care about, what our consumers and businesses and investors care about, the price you pay for it, not where it comes from.
That which is global.
And whether we're an importer or an exporter, whether we're big or small, if there's a disruption anywhere, prices go up everywhere.
In the meantime, Israel attacking Iranian energy sites means an energy crisis in Iran or beyond the region?
So it depends on what targets they attack.
Yeah.
So if they're attacking local oil terminals, like outside of Tehran, like they did, or the South Pars Phase 14 gas
Saw
field,
that yesterday,
right?
yeah.
That's
What
a problem for Iran.
Okay.
That's not a problem for Mr. and Mrs. America. That's not a problem for our Exxon station.
Israel
right?
surely knows this.
That's right. And so the Iranians hit the Haifa refinery. These are hitting domestic facilities in Iran and Israel. It's concerning because they're spreading beyond military targets. However, it hasn't yet hit flows or production that matter for the world. And that's why crude is off today, and folks are not so much worried.
Isn't that something? This is all remarkable to hear about. As I think about your answer on the Strategic Petroleum Reserve, we talked to the Energy Secretary last week. Chris Wright said it would take years. We've heard this constantly from the administration. First, we have to repair the caverns, and then we can start bidding. It's going to be a years-long process. But, Bob, it sounds like we don't have years. Based on what you just said, we might need that oil.
Yeah, you know, sometimes our biggest mistakes are bipartisan. And Congress, in its wisdom, both parties, starting about 5-10 years ago, started selling off the SPR just because we thought we didn't need it. And then President Biden sold about 180 million barrels, you know, when there was no emergency with Russia. We didn't lose any Russian oil. Had we lost Russian oil, would have been a reason there wasn't. So here we are. Half of the reserve is full. Secretary's right. Right is right. We'd have to be slow to refill it. I was working for President Bush, and we did it through a royalty in kind program, and it took us years to get back to the tippy top.
So you've already done this.
I've done it. I was there in the White House after 9/11. I was there for the Second Gulf War. We thought through the type of barrel flow and contingency planning, where are inventories, where's spare capacity, and the math gets pretty grim if we lose the Strait of Hormuz or Abqaiq, with or without an SPR.
If that happened, you'd have to release what was left in there now?
They would. I think we'd organize a release between us, and then the Japanese and the Germans hold most of the other stocks.
I see.
But we're talking about maybe 2 to 3 million barrels a day of flow. Hormuz is 18 total, maybe some redirects. We're losing 15.
Wow,
so 15 is a lot more than 3.
Fascinating. It comes down to barrels, as you always say.
It comes down to barrels. And there's an iron law of economics. You can't consume what you can't produce.
Oh, true.
And the price is like the police officer that enforces that rule. And if you lose 15 and you only can grab 13 from SPR, and you can't produce more in a hurry, we've got to consume that much less. And the price will do that by going up.
What does this mean for the big oil names, Exxon, Chevron, and so forth? Their stocks are hardly moving.
And I understand that. This is not a good thing for them. We've seen wars in the Arabian Gulf lead to oil price spikes, but what comes after that? Recessions, demand downturns, and price drops. This is not a good thing if you're an oil company or an oil producer. Now, what would be interesting is if there is regime change in Iran and you could get private companies operating in that country with the world's third largest oil reserves, gas reserves, third largest oil reserves. So there's a lot of oil there, and if Iran were to have regime change, peace and stability would be strengthened. So it's but for the oil companies, though, these momentary spikes are dangerous.
Really interesting.
I think it's the same thing for OPEC countries as well.
Having listened to Bob McNally for a couple of minutes here, you're not terribly worried yet but things could change very quickly. Is that a fair assessment?
You're right. I'm not terribly worried, but I'm more worried than we are today. Here we are in the markets. I would not be buying this sell-off here.
Okay.
I think we're going to be going higher before we go lower. I think this is not over yet.
Fascinating, as always. Bob McNally, Rapidan, great conversation. I'm so glad that you could come in. It's always great to have you here in the nation's capital. I'm Joe Matthew in Washington. Glad you're with us as well. We're going to have a lot more to talk about on the late edition of Balance of Power, and I hope you'll join us starting at 5 p.m. Eastern Time. We'll have the latest on Iran and Israel, latest from the G7, right here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. Carol Masser, along with Tim Stenivek, live here at Bloomberg headquarters in New York City. I gotta say, some calm I'm going to put quotation marks around it because it does seem like some calm returning to the global markets, but I guess it's all relative because there's so much going on, again, behind the market numbers.
Yeah, all relative. 0.9% on the S&P 500 to the upside. The NASDAQ composite up 1.4%. Charlie's going to have the details. Stocks, though, higher. Oil lower today, but if you look at the chart from just the last 6 weeks, it's a pretty big rocket ship higher. And also gold down. Sentiment is easing a little bit when it comes to those fears that Israel's war against Iran would escalate into a wider conflict. But, Carol, we're still seeing fighting between the two sides.
Exactly. We were just kind of debating in the newsroom, do we call it a war? Do we call it a conflict? Is it hostilities? So this hour, we're focusing a lot on the state of the world. Definitely top of mind. No easing in on this Monday. And so we're going to get into global security as Iran and Israel strikes continues. Tim just mentioned that. You've also got those world leaders meeting for their annual meeting, the G7 meeting. It's underway in Canada, so we're going to head there in just a moment.
Plus, a full plate for the Federal Reserve as it gets ready to kick off a two-day meeting tomorrow. My question for Michael McKee is going to be about what about higher oil prices and how's the Fed looking at those?
It's a great question. It's got to be top of mind for Fed Chair Jay Powell and company. And then riots around the United States over the weekend and more. We warned you, it's a pretty heavy Monday.
Yeah, that was just a sigh. That was just a sigh, Carol.
Everyone, deep breathe in, deep breathe out. All right, let's get to the trade and to Charlie Pellet. Hey, Charlie.
Hi, thank you very much. Happy Monday to you both. Global markets calming down somewhat. We have got the Dow, the S&P, NASDAQ, as you both mentioned, higher. Well in the green with the S&P right now up 53. That is an advance of just about 0.9%. We've got the Dow up 322, higher by 0.8%. NASDAQ up 284 for the NASDAQ Composite Index. That is a gain right now of 1.5%. Friday, you'll recall the S&P was down 1.1%. Again, the S&P keeping it all in context, up by 0.9%. The 10-year at 4.44%, with the 2-year 3.96%. Spot gold down almost $40 the ounce, down 1.1%, 33.93 the ounce. And West Texas Intermediate crude down 1.8%, 71.62 for a barrel of WTI. Airbus kicked off the Paris Air Show with orders from Saudi Arabian customers valued at as much as $17 billion, and a major purchase from Poland, building an early lead over Boeing. ADRs of Airbus, they're up by 1%. Boeing shares also gaining today, up by 0.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week Daily, Carol Massar, Tim Stenovec. All right, let's get to some of the latest headlines. We've been talking about it. Israel and Iran exchanging fire for the fourth consecutive day today, stoking fears of an all-out war with the potential to drag in others in the oil-rich region, and Tim forced the U.S. into a more hands-on stance.
So that's the backdrop, along with trade tensions and more for this year's Group of Seven summit. It's the 50th annual gathering of world leaders. It's happening right now in Canada. Speaking earlier from there, President Donald Trump and Canadian Prime Minister Mark Carney. Carney, though, we should note, is former chair of the board of directors at Bloomberg LP, the owner of Bloomberg TV and Radio. President Trump addressing the hostilities earlier in the Middle East.
They'd like to talk, but they should have done that before. I had 60 days, and they had 60 days, and on the 61st day, I said, we don't have a deal. They have to make a deal, and it's painful for both parties, but I'd say Iran is not winning this war.
All right, that, of course, is President Trump there with Canadian Prime Minister Mark Carney from the G7. Let's get more from the meetings. We head to Calgary, Alberta, Canada, our Bloomberg News Bureau there, and to Bloomberg News National Security Team Leader Nick Wadhams. Hey, Nick, good to be checking in with you. I know it's going to be a busy couple of days, busy week. There's a certain pomp and circumstance to all G7 meetings, a photo op, the family photo, so on and so forth. Every meeting, too, though, has specifics around it. And again, the geopolitical and macro backdrop. Set the scene for us this year around what's top of mind, like what is going on in the Middle East as we speak, and what else you're hearing is really on the minds of leaders.
Well, there's a lot on their minds. I mean, obviously, you see a lot of leaders coming here looking for common ground to send a message of unity around issues that really matter on trade, on Israel, Iran, on Ukraine, things like that. The big issue, of course, is whether President Donald Trump is going to be willing to go along. So far, we know he's refusing to sign a joint statement on the Israel-Iran conflict that would have called for de-escalation. The host, Mark Carney, has basically decided to dispense with the traditional joint communique that comes out of a meeting like this. So what you're seeing instead is a lot of leaders coming here looking to do bilateral deals with the U.S. on trade. So the Japanese Prime Minister will be here. You obviously have Canada. You have the UK looking to do its own trade deal. Claudia Sheinbaum, President of Mexico, not a member of the G7, but coming up as well. So they're all seeing this as a chance to sort of get Trump on neutral turf outside the spotlight of the Oval Office and try to cut a deal with him, given that it looks like the traditional role of the G7 as a place where Western leaders or democracies come together and sort of say, here's where we stand together and set these statements of principle. You know, they're just not going to be able to do that with Trump being such an outlier.
So does it seem like the takeaway from this, or the goal for at least for the United States and for other countries, would be to walk away from the G7 with some trade deals?
I think so. That's to make substantial progress. The president said, you know, it was achievable that they could do a deal with Canada here. I mean, there's not a ton of time. President leaves tomorrow night, as do the other leaders. So we're looking at about a 48-hour window, but they are looking for an opportunity to get something done. I mean, you know, more broadly, I think what Mark Carney essentially would want is to get out of here without a major blow-up. The last time there was a G7 meeting in Canada when Trump, in his first term, it ended in disaster when the president was flying out and he basically ripped up the joint communique, and it was a bit of an imbroglio for Justin Trudeau, the Canadian Prime Minister at the time. So they'd like to sort of use this as a chance to mollify the president, and at least create some image of unity. So far, though, Trump not necessarily willing to play along.
All right, and we're going to bring in David Gore in just a moment, because I want to get both of your thoughts on that. And I want to kind of play off of that, Nick, in that, you know, Bloomberg News, on reporting on the event too, specifically talked about how all the global leaders are trying to avoid conflict with President Trump. Is this President Trump at the center? He's got the biggest dance card and everybody dancing around him?
Yeah, I mean, that's certainly true, though there are obviously a lot of other meetings and bilaterals. Every leader is coming here looking to essentially meet with every other leader. You are seeing a move to essentially establish a ceasefire for Gaza that's being orchestrated by the Italian delegation. So there's other stuff happening here, but you know, it's just such a fascinating dynamic when you essentially have 6 united versus 1, and the U.S. being the outlier, but also obviously having the world's largest economy and the world's biggest military. I mean, you can't really get this stuff done without participation from the U.S., so it's creating some awkwardness up here.
All right, I want to bring in David Gore into our conversation. We're going to keep Nick Wadham still with us as well, but Bloomberg News correspondent, host of the Big Take podcast, excuse me, David Gore. He's there in Banff, Canada. David, you two on the ground, like Nick, you guys pick up on kind of some of the nuances, but I want to ask you the same question about this idea of President Donald Trump kind of at the center of it all.
Yeah, I mean, I go back to sort of what we knew going into this, that we have a prime minister still fairly new to the job in Mark Carney, who really wanted to avoid what happened back in 2018, wanted to kind of reform the agenda so that there'd be fewer landmines that he or other world leaders or Donald Trump could step into that could scuttle this whole thing. And I think what we saw this morning at that pool spray when Mark Carney was there with Donald Trump talking to reporters is, despite the prime minister's best laid efforts, all of that can kind of blow up in his face. So it was from that we got these remarks about Russia's previous involvement, and then what was the G8, now the G7, had him kind of musing about China playing a bigger role in this multilateral institution. Suffice to say, that's not something I think a lot of these other world leaders would be in favor of or even had considered going into this. So to Nick's good point, it's a very long and detailed agenda with a lot of meetings, both official and not. It's a long couple of days, and there are a lot of possibilities through which things can be changed radically by the comments of one world leader and by President Trump in particular.
What would a successful G7, David, look like to the United States and to President Trump as he leaves after a day?
I think before the crisis erupted in the Middle East, there was a lot of hope from this administration that some of these trade deals could be furthered. I'm sure they would say codified or signed, even though they don't seem to be in the position for that to happen. But I think they thought that the focus would be on what would come out of those bilateral meetings on the sidelines here vis-a-vis trade. And of course, what we've seen over the last few days has really cast a shadow over the proceedings in a way where that's unlikely to happen. And we saw both the president and other world leaders downplaying the likelihood of that happening over the course of this gathering. But I do look at President Trump in this forum in contrast with other G7s, including that one in 2018, and it's a president much more aware of the fact that he holds a lot of power here. There are a lot of eyes on him, and this notion of America first is now more firmly established. He feels more confident in that, and setting aside what's going on in the Middle East, recognizes the fact that he is the person with whom all these other world leaders want to meet and try to broker deals when it comes to trade policy. And there's a kind of confidence that comes from that I think is kind of eclipsing what we've seen in the past, which was his just kind of total disaffection with events like this one, finding them boring or not interesting or ponderous or unlikely to kind of yield the results that he would like to see.
Yeah, but there is something significant, right, that he is there and, a part of these meetings. Nick, come on back in on this conversation. Is there any feeling of global unity? And I say this with, Israel, Iran, that conflict. We still have Russia and Ukraine at war. There's a lot of stuff going on where not necessarily everybody agrees on how things should move forward from here. But I'm just curious, is there any signs of global unity? Again, and I do think it's significant that, President Trump ultimately is there.
Right, he is here. There was some speculation in the months before whether he would even attend. So his coming, I guess you could see that as a relatively good sign. But, even Mark Carney acknowledged in his opening remarks at this meeting, nostalgia is no longer going to suit us. We can't keep yearning for days gone by, which is essentially a recognition just how much things have changed. I mean, as David mentioned, you have this extraordinary moment. The first event of this whole conference was Trump meeting with Mark Carney for a bilateral, and Trump's first comment in that was what a huge mistake it had been to expel Russia from the G8 in 2014, and saying essentially that if they hadn't done that, the war in Ukraine never would have started. Of course, he got the facts wrong. He said Justin Trudeau had been the Canadian leader at the time. He wasn't. He also said that Russia was expelled. That was a mistake. Of course, Russia was expelled because it had invaded Crimea at the time, and when you invade a sovereign state like that, that's kind of incompatible with the principles of the G7. So it was a real signal at the time that Russia just could not be in this organization. So you see him immediately sort of coming in and almost asserting his dominance and separating himself from the other members. It's very hard to see how they can find common ground when the U.S. president is basically coming in, essentially spoiling for a fight.
It's interesting. I look at the global markets, and, we've got a rally underway here in the U.S. We saw global markets, bounce back on expectations, or some reporting by other news organizations about maybe the tensions between Iran and Israel and Iran easing. You could kind of, whiteboard. You can kind of go a lot of different ways here. But David, come back in, because I think it's just a reminder that even on a market rally, there's just so much going on around the world at this moment. I think about the protests in the United States around the weekend. I'm looking at your backdrop. It looks awfully peaceful. You're in a pretty remote place, and my understanding some of that was to minimize protests at the G7 meetings.
Yeah, I think the geography is really important here, and so the meetings themselves are taking place in Kananaskis, which is a provincial park about an hour from where I am in Banff, and the media center is here. Some meetings are taking place here, some press conferences, and then there's also goings-on in Calgary as well. But it's a triangle where each line of the triangle is about an hour from the other. So it was sort of deliberate from Mark Carney, the organizer, that you would get these leaders together in a very remote, isolated place, and maybe born out of that would be more opportunity for informal talks, a chance to kind of further those relationships. Again, drawing this contrast as I have to 2018, most of those principles from 2018 are gone. So it's a chance to start fresh. Obviously, the organizer, Mark Carney, hasn't been on the job for very long either. So it's kind of deliberate the way that all of this is set up, but you're wise to bring up all that's happening here, and you turn on the news, you listen to Bloomberg Radio or television or any network and just see all that's happening. It is overwhelming, and again, there's the official agenda at this summit, and there's the unofficial one as well. And just kind of focusing on the Middle East in particular, I think that there was some hope from many of the leaders gathered here that, as we heard from them as they came here, there were statements about that crisis in the Middle East, this call for that to be de-escalated. I think there was hope that there could be kind of a unified statement of the G7 leaders on that issue. That's not going to be the case, it sounds like, coming out of this. That's not what Donald Trump, the President of the United States, wants at this point in time. He continues to call for diplomacy and for Iran not to have nuclear weapons. But you see just kind of this strain, even with something that is galvanizing so much attention, not just from world leaders, but from everyone, the U.S. kind of reluctant or unwilling to enter into that kind of statement, that group statement.
David, you mentioned the U.S. reluctance there, and it raises a bigger question, and we're going to ask Nick the same question too, which is, why in 2025 does the G7 matter? What is the significance in today's day and age?
You're asking me first or Nick?
You first, David, then Nick. Nick gets some time to prepare.
You cannot take a pass.
And Nick can clean it up after. Look, I respect what the Prime Minister said about not being able to rest on nostalgia, but this has been a forum for 50 years, as the Prime Minister pointed out, nodding to the history of this multilateral institution, when these countries who started out as friends got together to work through and talk about a variety of issues of importance to all of them and to kind of flex their might as democracies and leading economies. And I think fundamentally that continues to be the case here. They wield a lot of power, and I think, as all would say, if they can work together and find points of agreement, it makes them present a more powerful front to the world as a whole. I think that that's why the G7 still matters. It is an occasion when these world leaders can get together, rare as it is, to have tough conversations and to think about the path forward. Obviously, we've seen the strains and the fissures here, not just at this summit, but at ones previous to it. But I think fundamentally just having that forum remains crucial for those who believe that multilateralism is something that better than countries going it alone.
All right, over to you, Nick. Your thoughts on why G7 really still matters.
Well, I mean, you know, I don't know if it's for me to say that it matters or not, though, but it is really interesting. I mean, when you look at, you know, this situation, leaders come and go. I mean, when President Trump was last year, I think the only leader who was around the table who's here this time is Emmanuel Macron. So there's a lot of turnover. Who knows what happens from one year to the next. It is also for us a very interesting place in the sense that you can really pick up on some bigger global shifts. So last night, the European Union's Ursula von der Leyen was here. She gave a press conference and talked about pulling Canada more closely into the European defense infrastructure and architecture. And that was just sort of a fascinating moment for me. That's something they've talked about repeatedly over the last many months, but it shows these shifts that Europe wants to embrace Canada more and sort of implicitly pull it a little bit away from the United States, and that reflects this much broader unease about how things are shifting, the power dynamics are shifting geopolitically and globally, where Europe wants to find common cause with Canada and a little bit separate it or pull it away from the United States. And so you come to these events looking for clues where you're looking for those sort of broader, slower tectonic shifts in geopolitics.
So important, certainly at this moment in history. Gentlemen, thank you so much. Really, really appreciate it. Of course, we've been talking with Bloomberg News National Security Team Leader Nick Wadhams there in Canada, our news bureau there in Calgary, Alberta, and of course, Bloomberg News correspondent, host of the Big Take podcast, David Gore, he too on the ground there in Banff. I should point out that the family photo, the group photo, coming our way at about 7:45, I think it is. East Coast time.
Okay.
That can get a little, you know, sharp
Who's going to stand where? That's always the question, right?
It always does, right? All right, folks, don't go anyway. Fed meeting this week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at gains for the Dow, the S&P, and NASDAQ. S&P right now up 53. That's an advance of 0.9%. The Dow up 320, higher by 0.8%. NASDAQ up 281 for the NASDAQ Composite Index, a gain of 1.5%. Stocks are higher as fears of an all-out Middle East war ease. The 10-year ahead of the Fed decision Wednesday. 10-year at 4.44% with the 2-year currently yielding 3.96%. Gold is tumbling $43 the ounce, down 1.3%. And West Texas Intermediate crude now retreating 1.6%, 71.79 a barrel. President Trump says Iran does want to talk about de-escalating the conflict with Israel. Sarepta Therapeutic shares are plunging after reporting a second patient died of acute liver failure while being treated with its gene therapy Elevidys for a rare muscle disorder. Shares are trading lower now by 43%. Again, recapping, stocks higher. S&P right now up 53. That is a gain of 0.9%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, me, Tim, the whole Bloomberg gang, man. We're going to be thinking about the Fed this week because the Fed kicking off a 2-day meeting on U.S. monetary policy. That gets underway tomorrow. It will be the fourth decision. I think I counted right. Fourth decision of the year. It comes out on Wednesday. It's a decision. It's commentary. It's a Jay Powell presser. It's also a dot plot. So we're also going to get, Tim, that summary of economic projections.
Yeah, I think the question the president has is, are we going to see 200 basis points of rate cuts like he called for last week? I don't think that's going to happen. We'll see if Mike and Mike think it's going to happen. The Michael McKee, Bloomberg News International Economic and Policy Correspondent at Bloomberg News. He's already in Washington, D.C. He joins us from our Washington, D.C. bureau. We've got a Bloomberg News rates reporter, Michael McKenzie, here in our studio. Guys, good to have you with us. Ahead of this, interest rate strategists at J.P. Morgan Chase recommend positioning for a flattening of the Treasury yield curve ahead of the Fed's rate decision this week. Bank of America closes a set of trade recommendations amid less negativity for long-end Treasuries. Michael McKee in Washington, D.C., I want to ask you about oil and the way that oil is going to play a role in the way the Fed thinks about inflation moving forward, given the price increase that we've seen just in the last few weeks.
Well, in general, people tend to think of oil as not mattering that much to the Fed, and we look at the core price indexes that leave energy and food out because those are very volatile components. But it's a little more complex than that, in that oil prices can, if they're high enough for long enough, feed into other aspects of the economy. Petroleum's used in a lot of materials, plastics, chemicals, pharmaceuticals. So you can get higher prices out of it if it lasts for a while. The question is, how long is this elevated oil price going to remain? We've seen it bounce around quite a bit as various rumors come and go about how long this altercation between Iran and Israel will last. So the bottom line is, Tim, we're not going to see the Fed really take a whole lot of account of it at this meeting. They'll have to watch and wait and see if it continues into the late summer or even into the fall.
All right, so Michael McKenzie, come on in on this. I mean, what are you expecting? What's key for you as we get ready for the next Fed decision?
The dot plot's always important. We haven't had a dot plot updated since March, and of course we've had a lot of new things have happened since March.
It's amazing,
starting
right?
with Liberation Day, and now, of course, the unfortunate events in the Middle East. So I think the market is bracing for perhaps the Fed dropping the dot plot call of 2 rate hikes this year down to 1. It would only take 2 people on the board or on the governors to actually shift the dots, and you would go back to 1. We're already trading below 2 full rate cuts being priced for this year already, so the market will probably retreat a bit more. It means the 2 years probably vulnerable. It's probably why some Wall Street firms are looking for a flattening of the curve. Funnily enough, today, of course, we've seen the long end sell off a bit more, and it's really about oil, as Mike just mentioned. There is a sort of an inflationary angst going on here. So think back last week, the bond market started to rally when we saw softer CPI and PPI, and since Friday, we've just been giving that up.
Well, which is interesting. Like, Mike, I'm thinking about, I'm listening to Michael, and I'm thinking, does the Fed have to be very careful on how it threads the needle between a dovish tone and hawkish tone? Because there's just all these ifs out there, and we just, as you say, even with oil, it's just depending on how long this conflict lasts and how long we see higher energy prices. There's just a lot of questionable factors that the Fed has to kind of weave into its message.
I think you were right about this being the fourth meeting in a row that the Fed will try to thread that needle. And if they get their way, they will make no news and the markets won't move. Markets will probably move because we have the dot plot. We have enough moving parts that they could see the markets move for 24 hours or so. But no, the Fed is going to try to stay out of the way. They'll change the statement as little as possible. The forecasts will be interesting because at this point, they probably have to raise their inflation forecast. And we know they're going to raise their unemployment forecast. So the question then becomes, what does it do to overall GDP? Does the GDP number come down a lot and signal that the Fed has to do something in order to keep the economy afloat? That's the tough part for them. How do they explain movements in the summary of economic projections, and how can they relate that to the dot plot while at the same time, as Jay Powell always does, saying don't pay any attention to the dot plot?
Yeah, I think that's don't pay any attention to this thing that we released
Don't
that everybody
look at the man behind the curtain.
everybody says is the thing that we are supposed to pay attention to. Speaking of that, Michael McKenzie, you say the dot plot is going to be sort of what you're looking at. What else? What are you looking from the Q&A? Like, what are the questions that you hope Jay Powell answers? I know there are going to be a lot of questions about politics, perhaps about a lunch with the president. We also know what he will say in response to those because he's given the same answer over the last few months and over the last few meetings. We're not going to learn anything about the political side of this. What are the questions, though, that you still have?
I mean, really, as Mike says, if you raise your inflation forecast and you're raising the unemployment rate, you are essentially telling the bond market pricing more rate cuts next year. And I guess they'll look at the dot plot. What does that say for next year and beyond? I think the Fed could possibly also continue to push up the terminal rate. So that would then indicate that it's a much shallower rate cycle to come. So I think those are going to be some of the issues. I think Powell will again, as Mike has said, they've got to thread the needle here because he needs to wait to see whether or not there is any pass-through from tariffs into inflation. They are watching clearly the labour markets, or other Fed officials such as Christopher Waller has spoken about. They will cut if the labour market weakens. But again, judging on what we're seeing in the labour market, jobless claims aren't flashing a warning. Continuing claims are getting a little bit worrisome. And again, the bond market's kind of clinging to that kind of trade still, which is why the 2-year note's below 4%. And then I guess it's really about the budget and how does that complicate things for policy making? Because if this budget is stimulus, more stimulus coming in, that's going to fire up the economy again. And this is why the back end, I think, has a very tough time sustaining rallies. Because at the heart of this, if the Trump administration wants to goose the economy, then, and again, with the immigration issue, does the unemployment rate stay, low? So therefore, the Fed's losing a bit of its typical guidance on how to react to signs of weakening labor. So I think the back end looks vulnerable, which means if you're a bond trader, you're probably going to like sitting in the 5 years still. It's the most overcrowded part of the curve to be in, has been for a long time.
Bellies are usually big.
The belly is big, and it's getting a bit bigger, right? So it's a real pot belly. But I think it's because if the Fed delays now, there's a risk they have to do more next year. So stick with the 5 years seems to be the mantra in the bond market.
Mike, when it comes to the Federal Reserve and the central bank, I don't know, how much of you think is going to come up about Jay Powell and the rest of his tenure and the pressure that he seems to be getting, again, from the White House, from President Trump specifically? Nothing new, but he's out there.
Well, some of us have talked about the idea of Jay Powell coming out and saying, not my problem. But he'll probably get asked about it, and he'll demur and say, our job is not to worry about fiscal policy. Our job is to deal with the economy as we see it, and we focus on unemployment, and we focus on price stability. So I don't think, as Tim said, we'll get much out of that. The interesting part will be to see if we get anything in terms of when they think they will have enough information about the economy to even make a decision. Bloomberg Economics just did a survey, and 39% said that it would be September at the earliest, and 42% said the fourth quarter of the year. So if you're looking to see what the bond market is telling you after this Fed meeting, it's probably not telling you a whole lot because market participants themselves don't think the Fed is going to have a good idea of what's going on for quite some time. And that's going to be, a really good example. July 9th is when the reciprocal tariffs are supposed to come back on. So that's 2 weeks after the Fed meeting or 3 weeks after the Fed meeting. What's the shelf life of the SEP and the dot plot that we get next week?
I mean, that's a good point, right? It's something that we keep talking about, that until we really know what the tariffs are in place, what we know is part of the spending and tax bill. Like there's too many things we don't know, Mike, right? So until those are resolved, is it likely that the Fed kind of errs on the side of maybe let's not do anything until we really know what we're dealing with?
Sure. I mean, if you don't know what to do, don't do anything is probably the best advice because they don't want to err on the wrong side of doing something. If inflation is going up, they don't want to have cut the Fed funds rate. If we're seeing the economy slow down, they don't want to have raised it. By sitting where they are, they're in pretty good shape to do either one, or they could just remain at 4.25 to 4.25 to 4.5%. And that's probably not going to hurt the economy all that much unless we see a real collapse in growth. And that's probably going to depend on what happens with the reciprocal tariffs and, as Michael says, the budget and whether it's seen as stimulative or not.
So to Michael McKenzie on that and on the economy, the bond traders who you speak to each and every day, do they seem more concerned about growth, inflation, or the labor market? What do they see as their main concern right now?
I mean, for them, a weakening jobs market gives a clearer signal that the Fed will move. And they'll do so because weakening growth will overcome any worries about inflation because it will slow the economy down. So it sort of kind of takes care of the inflation problem in their eyes. So that's what they're looking for. Today, I mean, again, it was quite funny, like last week asking people ahead of the CPI and PPI, it doesn't matter, jobs matters. And so it's kind of where they're going at the moment. But again, to Mike's point, it's probably unlikely you're going to have any clear indication until September at the earliest. And then the question will be, okay, did they do one cut or did they do two? That's still going to be the sort of ballpark figure here, I think, for the bond market. So we're just going to be stuck in these ranges, I think. 450 in the 10s, or just under 5% in 30s, and around 4% for 2s. This is kind of where we've been for a while now.
Mike, last thought to you, 20, 30 seconds. On the labor market, could it go either way? Could it start to come undone? Or could
it sure could.
Yeah.
I was talking with someone in the retail business just this weekend who said that their understanding is a lot of companies are very close to making big layoffs. And if they get pushed by the tariffs that are going to be announced or by the budget, if that suggests that there's going to be some kind of retrenchment, then you might see a sort of dam break and a lot of people get laid off or companies start to announce layoffs and then scare the public.
Right.
So that is something that is out there that you're going to have to keep an eye on.
Tim and I are going to talk a little bit later about a story from the Journal about young graduates facing an employment crisis. You look at the unemployment rate for grads, it ain't pretty. All right, Michael McKenzie, thank you so much. Bloomberg News, of course, rates reporter, and our own Michael McKee, Bloomberg News International Economics and Policy correspondent. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. Global markets calming down, stocks rising, oil and gold prices falling. Fears of a wider conflict between Israel and Iran are subsiding. The S&P right now up 52. That is a gain of 0.9%. The Dow up just about 300 points, up 0.7%. The NASDAQ Composite Index up 274, up now by 1.4%. The 10-year yield at 4.44%, with the 2-year 3.96%. Gold is down $43 the ounce, down 1.3%, and a retreat for West Texas Intermediate crude down 1.8%, 71.64 a barrel. American Express is teasing updates coming later this year to its travel-focused Platinum credit cards, announcing what it is calling its largest investment ever in a credit card refresh. American Express up now by 2.4%. Victoria's Secret being targeted by another activist investor seeking a shakeup of its business. Victoria's Secret shares up now by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic live here at Bloomberg headquarters in New York City. A couple of things I'm sure you've heard about it, but we just want to remind everybody about the difficult weekend it was on the domestic front. U.S. prosecutors charged alleged shooter Vance Bolter with 2 counts of murder in the deaths of Minnesota State Representative Melissa Hortman and her husband in what officials referred to as a murderous rampage that was early Saturday morning, also over the weekend. Protesters rallying in hundreds of U.S. cities to denounce what they said were President Trump's authoritarian tendencies, including the increased deportations and tactics used to carry them out. You know, Tim, we kicked off talking about kind of global geopolitical tensions, but there is a lot going on the U.S. domestic home front.
So let's talk about that, domestic tensions that are simmering. Back with us is FGS Global partner Beth Vui. FGS Global is a public affairs consulting firm. Beth, a former senior politics editor at NBC News and MSNBC. She joins us here in the Bloomberg Business Week studio. I want to start with the Minnesota shootings and look at them through the lens of the other political violence that we've seen over the last year or two. Assassination attempts on the president before he took office. We saw the murder outside of the consulate earlier this year in Washington, D.C. Of people in the U.S. there in what was, I think fair to say is perceived as political violence. There was a really depressing story, I believe it was yesterday in the New York Times, about how political violence in the U.S. is now becoming as routine as school shootings. Like, that's such a grim thing to even think about. What's going on here?
Well, I think you're seeing the conflagration of a couple of things. One is the very high-pitched tensions that everybody's feeling about politics. We know our country is extremely polarized, extremely divided. People on social media, their tempers getting, riled up. And then you add to it the element of guns, which we have in this country at a much, higher level than any other comparably civilized country. So the combination of the violent tendencies and the ability to execute literally and figuratively with a deadly weapon makes us unique. It's a very scary time for sure, particularly for those public officials who are finding themselves really under scrutiny, under attack. We could have mentioned Nancy Pelosi's husband being, that didn't involve a gun, but clubbed right in his home. The J6 folks who attacked the Capitol with weapons, clubbing, hurting, killing in some cases police officers. We're in a very fraught moment right now, and doesn't seem to be much sign of cooling. And I would say the other problem we're facing is as soon as one of these things happens, everybody jumps to conclusions about why. What was the shooter's motive? What was the attacker's motive? Which political side are they on? Granted, right now we're seeing more violence happening on the right, but it would behoove everyone if they didn't jump onto Twitter or jump onto X or what have you and make assumptions about what's going on here. A lot of times people have very complicated histories. They may suffer from mental illness. We need to learn more before we sort of draw all sorts of conclusions about why people are doing what they're doing.
Completely agree, right? You got to know all of the information, something. Having said that, there is something about freedom of speech, peaceful protesting. I feel like, look at on college campuses where we used to embrace different thoughts, right? And different political views, where all of a sudden that's almost like it doesn't happen anymore. So there is something else going on. And I'm just curious, your thoughts on that, because that certainly plays into the political tensions that we're seeing here.
Yeah,
like the inability to have, we do it here all the time, have conversations in the newsroom where we all don't necessarily agree, but we learn from each other.
Yeah.
But something has gone away on a national level.
Yeah, it doesn't feel that way, doesn't it? I mean, it does feel like there was a period of time, maybe not that long ago, where one could have sort of a civil conversation with people that you may or may not agree with. College campuses, I mean, what we've seen, in most recently is the activity around Israel-Palestine, Israel-Gaza. That has motivated a lot of college students. It has, brought lots of accusations of Jewish students being mistreated on campus, or the free speech of folks who want to demonstrate on the behalf of the Gazans not being allowed to, or being, in the case of Colombia, police being brought into the campus to break down those camps last year. I mean, we saw a lot of rage, a lot of anger. Unfortunately, yes, because we're dealing with a very fraught political environment and tensions are running high.
And yet we have social platforms where we have a president of the United States that certainly feels free to post at will. I would say business leaders like an Elon Musk who feel very comfortable to post at will. So it's just like
he actually owns his own platform.
No, I understand. Right, and that's become the new media, right? That very wealthy people seem to buy into to kind of be able to do that. But it's just this unevenness of certain folks being very comfortable saying whatever they want, and then a lot of Americans feeling nervous, or business leaders. How many business leaders do we have come into our room who will talk off air saying there's fear about really saying what they feel about various policies?
Yeah, and at our firm we deal with those kind of
what do you
clients
hear from
all
leaders?
the time. I mean, they want to stand by their values, but they're also very worried about drawing scrutiny, perhaps from the administration, drawing backlash from their consumers about the practices that they've decided to engage in. So they're very nervous about expressing themselves in any way at all, and that's an uncomfortable feeling to have as a leader, to not be able to sort of say where you stand, where you believe your company stands, where you want to represent as a leader going forward, and feeling like you can't do that.
One thing that we're talking a lot about here is not just the protests against ICE in Los Angeles and the riots and, what happened there over the last week or so, but also the way that the president and his administration are thinking about immigration, because it seems like there has been some change there, specifically with regard to farm workers, workers within the hospitality industry. It seems like leaders are talking to him and saying, wait a second, we're actually having trouble finding workers. There have been a lot of different presidents that have tried to solve this. Will this administration, in your view, does it have the tools to actually make change here?
Well, I mean, the fact that the president has had to acknowledge that certain industries will not function without this labor force is really quite surprising, given that he did campaign. He was very obvious about what he intended to do. He said he was going to deploy federal forces to get rid of people living here illegally. He didn't differentiate one or the other. He said, we're going to go for the criminals, and then we're going to go for everyone else. He is now recognizing the fact that much of our economy runs on this labor. There's no obvious replacement for these folks, so he's going to have to make some changes. That said, he also just came out last night and again this morning announcing that he was going to deploy ICE into Democrat-run cities in order to purge folks out of those places specifically, and he named what he said was illegal voting by undocumented people, which that basically does not happen at all. Well, there's tons and tons of research on this, but it was basically him announcing that he's going to use ICE as a political tool, not just a tool to remove people who are here illegally, but rather to target places that are he opposes politically, or they oppose him.
Is it more about culture war optics versus immigration policy that we're seeing with President Trump? And just got about 30 seconds.
Yeah, look, I mean, that was something that he ran on was immigration, and he was very much had the sympathy of many Americans who felt like our immigration policy had gone out of control. But what they are doing now, this sort of ramping this up, just taking people wholesale out of the country without really looking at their situation, not putting them through due process. There's a big backlash against that now.
All right, gonna leave it there. Covered a lot of ground. Thank you so much. Really appreciate it. Beth Fouie, FGS Global Partner, joining us right here in studio. Folks, we're looking at a market where we're just off our best levels of the session, so we're down just about 0.8% on the S&P 500, NASDAQ 100, a gain of 0.8%. It's been down so much, I kind of can't
It's in
go.
the green.
NASDAQ 100's up about 1.3%. When we come back and check on stocks on the move, this is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're just coming up on, I don't know, about 67 minutes to go until we wrap up the closing. But how did you
Nice
quick
round,
math?
a nice round number, Carol.
Like the
Thank
calculator
you.
in my head.
Let the clock, the countdown clock begin. Throw 67 minutes up there.
3 days away till Thursday.
Yeah, well, the markets are
Shortened
closed.
trading.
It's a holiday shortened trading week.
It's a little strange.
It's a little, yeah, having a Thursday off.
Yeah, and a Fed meeting.
I bet Friday's going to be quiet.
I think so too, right?
If I can make a prediction, I don't make a lot of predictions. I'm not a betting man.
Because if you
I'm gonna
didn't,
guess,
it's a great long weekend.
I'm guessing Friday's going to be quiet.
Take off the Friday.
Yeah.
We didn't, but
No, I'll be here.
We'll be here.
You'll be here.
I'm Carol Masser along with Tim Stennebeck. Let's take a look at some stocks on the move on this Monday. With us is Bloomberg News equities reporter Alexandra Semenova. Boeing is certainly one on your radar.
Yeah, a lot of green on the screen today, and accordingly, I picked 3 stocks that are up today. Boeing is one of them. It's climbing to aircraft jets that it's made over the past 4 to 5 months. This has been a long, winding process. At some point, Elon Musk was even involved. And now the pair of Air Force One jets are actually making progress. The jets have suffered cost overturns and various delays, given what a challenge it is to build an aircraft that not only has to perform secure missions, but also act as kind of a de facto White House in the sky. And finally, Steve Parker, the interim head of Boeing's defense business, said today that they are very, very close to completing the aircraft design. After that, they'll have to settle on a configuration and then actually proceed with building. Prior to today, Boeing was down for 4 straight trading sessions conditions, of course, with those losses worsening on Thursday after the devastating Air India air crash. That disrupted a really remarkable turnaround for the company, which is up about 14% year to date after falling more than 30% last year.
Wait, so what? Go.
What takes so long?
Well,
Is that we're close to the design?
But you know what? If
What?
the Qataris are going to give us a plane, all of a sudden, I don't know, we made progress?
Well,
What?
I don't know.
Okay.
And maybe we should talk to Julie Johnson about this too.
I know,
but
they're very close
to a design.
Yeah.
Just to remind everybody, this was something that was decided on many years ago when the president was first president. Aircraft One, the Air Force One, or the planes used as Air Force One, are like 30 years old at this point. So this wasn't a surprise, but it's just mind-boggling to me that something like this takes so long.
It's complicated.
It does.
Like
And
the
very
security, communications.
No question, it's complicated. But how many years? And the president has been clear about how he feels about this. Yeah.
Clock is ticking. Roku and Amazon.
Yeah, so Roku is getting a bid today. The stock, last time I looked, was up about 10%. That's still holding right now. This is after the company announced a partnership with Amazon's ad business. Amazon also up today. Basically, advertisers will now have access to more than 80% of households with a connected TV. The partnership is meant to enhance addressability across services, including Roku Channel and Prime Video. This is a great thing for advertisers and also for these companies. I always like to look at the Wall Street commentary. William Blair is very positive. They said that it's difficult to frame the actual financial impact, but this is a win-win situation basically for both companies. And Benchmark also saying that this is a big step forward for both Roku and Amazon. That stock obviously rallying accordingly.
So bring on the ads, right?
Bring on the ads.
Yeah, I'm looking forward to that, aren't you?
All right,
Tim?
bring on the ads and take out the American Express Platinum Card.
The ARK Innovation ETF, by the way, is up a lot because apparently they've got a pretty big holding in
Kathy
Roku.
Wood is a big fan of Roku.
Yeah, ARK ARKK is up 4.2%.
Okay.
I'm just adding that in.
Okay, look
it's a
at
gift.
that.
It's a gift.
You know, it's a day when there are no decliners.
Even when profitless tech is doing well.
Yes, exactly. There's a lot of euphoria out there.
Exactly.
Okay, let's get a little closer to earth. Talk about American Express, because maybe some news for those Platinum card holders.
Yeah, so it is planning updates to its travel-focused Platinum credit card, calling it the largest investment ever. They increased the annual fee back in 2021 to $695, and ever since have been really struggling with a lot of competitors. JP Morgan Sapphire Reserve card, you have Capital One's Venture X Rewards card, but now this is meant to kind of help it in this really competitive landscape. Amex's group president for U.S. Consumer Services today said they're going to take these cards to a new level, not only in what they offer in travel and dining, but also in how they look and feel. So very curious to see what it will look like that is making it so magical and worth that $700 a year fee.
My own theory is that there's going to be a price hike coming at some point.
Oh,
because
absolutely.
$695 I think feels like a lot of money to a lot of people for a credit card, but they haven't raised the price since 2021. So if they come out and say, we're adding so much more, we're going to make it more valuable, in order to pay for that, we're going to raise the price.
Got to make sure you have the benefits that go along with it, because I think it's getting pretty competitive.
I mean, anecdotally, anyone I know who has one seems to quite like it. But again, when you have JP Morgan and Capital One also rolling out really good cards with smaller fees and offering the same perks, it's a tough market.
I will say Amex is really great when you've got a dispute, man.
Oh, yeah.
There's someone there, put the charge on hold. Like, it's pretty good stuff, right? It sounds like you might have had a dispute or two. I certainly have.
They've been pretty positive about dealing with it.
I'm just listening to you, Carol Masser.
Bloomberg News equities reporter Alexandra Semenova. So appreciated. Hey, for more conversations like this, check out our Stock Movers podcast. You can find 5-minute episodes on the biggest winners and decliners in the stock market. You can find it on Spotify, Apple, or anywhere you get your podcasts.
Hey, we got a great program coming up over the next 2 hours on Bloomberg Business Week Daily. We're talking energy. Given the fast increase that we've seen in oil prices over the last few weeks, it may be down today. We're going to talk to one portfolio manager. It's on his radar. And then also dig in more on this American Express news.
Yeah, good stuff. That's all coming up. If you're watching on TV, the close is coming your way.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Matt Piper. The man accused of killing a Minnesota lawmaker and wounding another has just made his first court appearance. Vance Belter told the judge he cannot afford an attorney.
Belter went to the homes of 4 Minnesota state politicians with the intent to kill them.
Acting U.S. Attorney Joe Thompson.
It is no exaggeration to say that his crimes are the stuff of nightmares. Belter stalked his victims like prey. He went to their homes, held himself out as a police officer, and shot them in cold blood.
Belter was arrested late last night and now faces federal charges. Israel Prime Minister Benjamin Netanyahu says his military will kill Iran's military leaders one by one. President Trump is attending the G7 summit in Canada, where he spoke about the escalating war between Israel and Iran, now in its 4th day.
It's painful for both parties, but I'd say Iran is not winning this war. And they should talk, and they should talk immediately before it's too late.
Our Robert Berger's in Jerusalem.
The original goal of the war was to knock out Iran's nuclear facilities, but it's expanded now that Iran is firing these powerful ballistic missiles at Israel. So the second goal of the war now is to target the Iranian ballistic missile program. The Army saying that the Israeli Air Force has knocked out about a third of Iran's missile launchers.
To Hawaii, where locals in more than 100 homes in Maui have had to evacuate due to a fast-moving brush fire. The fire's about 60 miles away from the deadly fire in Lahaina in 2023. So far, no injuries or structural damage have been reported. ICE may be reopening a long-shuttered prison in Kansas to house migrants that federal officials arrest.
The Trump administration will pay the private prison firm CoreCivic over $4 million a month to reopen a facility in Leavenworth, Kansas, that a judge once called a hellhole. The prison will be used to hold thousands of migrants arrested by ICE. The deal's part of a surge of contracts the administration has issued without seeking competitive bids. Stacey Lynn, CBS News, Washington.
A 3-year-old child is among 6 killed by flash flooding in West Virginia. Within 30 minutes Saturday night, up to 4 inches of rain fell. Our Tom Hansen is in Fairmont, West Virginia.
There is an apartment complex here where the facade has essentially toppled over, people's belongings just dumped out of this building, their lives turned upside down in a matter of minutes.
Another chain files for bankruptcy, this time at home. The home decor and furniture retailer with more than 200 locations in the U.S. The company opened its first store in the 70s. This is CBS News. The Trump family company says it's launching a cell phone company.
Eric Trump, one of the president's sons, will run the business called Trump Mobile, with a plan to build its own phones in the U.S. and maintain a call center. President Trump criticized Apple last month because it planned to make most of its U.S. iPhones in India and threatened a 25% tariff. Trump Mobile says 5G unlimited service through major carriers will cost $47.45 a month. And the plan is to release what's called a sleek gold phone next month. Steve Kathan, CBS News.
Investigators in India have found the second black box at the crash site of the Air India Flight 171. The Boeing Dreamliner slammed into buildings last Thursday, killing all but one of the 242 people on board and dozens more on the ground. Rescue workers and investigators recovered the other black box, the flight data recorder, on Friday. Matt Piper, CBS News.
This
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. We are just about 55 minutes away from the closing bell on this Monday, June 16th. 2025. Carol Masser, Tim Stanovic, live in our Bloomberg Interactive Broker studio. Tim, we've got a rally underway. Some reports earlier today about maybe some easing between those tensions between Israel and Iran, but we're watching it very closely. We have seen energy markets, though, react, that's for sure.
Yeah, energy markets and gold also lower on the day. Energy, the worst performing sector in the S&P 500. Rob Thummel is standing by. We're going to be speaking to him in just a few minutes. Also, facial recognition versus facial authentication in the age of deepfakes.
What's the difference?
We'll find out in the 4 o'clock hour. That's called a tease, Carol. And I'm glad that...
Well done.
I'm glad that you found it enticing. So
I guess I'll stick around.
I guess I'll stick around. Also, Dave Lee is going to be stopping by of Bloomberg Opinion. He has been covering technology for years. He's got a lot of thoughts on what Meta Platforms is doing when it comes to AI.
I hope he has a lot of thoughts because they're spending big time when it comes to AI.
Just don't call it an acquisition, Carol.
Okay, I won't do it. I won't do it.
Even though they bought, even though the guy who started the company is going to be like sitting next to Mark Zuckerberg and the whole payroll's there, just don't call it an acquisition, okay?
It's an acquisition.
Oh, no.
Okay.
Regulators, it's not an acquisition.
Gosh, I don't know. Gray area, nuances.
Gray area.
All right. Not a lot of gray area when it comes to the trade. We really are seeing largely a risk-on trade on this Monday. So let's get to it with Charlie Pellet with the latest on the trading day. Hey, Charlie.
Thank you very much, Carol Masser. Definitely no gray, a lot of green. Dow, S&P, NASDAQ all advancing 53 minutes now ahead of the closing bell. Right to the numbers here. We got global markets calming down with the S&P advancing 50 points right now at 6,027. That is a gain of roughly 0.9%. The Dow up 276, up 0.7%. NASDAQ up 278, up 1.4%. Broad-based rally here. Russell 2000 index up by 1%. Our Mag 7 index up by 1.5%. 10-year 4.45%. The 2-year 3.96%. We've got gold and oil both retreating today. West Texas Intermediate crude down 2.3%. Spot gold down $46 the ounce, down by 1.4%. As for investor sentiment, Ethan Devitt is Chief Global Market Strategist at Moneta Group Investments.
I've seen actually a buy the dip consistently right through this. And most importantly, I have seen U.S. investors not wishing to sell, quite confident in their buy and hold strategies. I think they've been well coached by their financial advisors not to try to time these markets. It's simply been too dangerous.
Ethan Devitt of Moneta interviewed this morning on Bloomberg Open Interest. As we have been reporting, President Trump launching a Trump-branded mobile phone service. Shares of AT&T trading lower now by 1.2%. We've got Verizon down 1.3%. T-Mobile higher by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Okay, let's talk energy. It's the second worst performing sector in the S&P 500 right now. It was the worst performing. Utilities taking a leg lower.
Right?
There is some bouncing around.
Did you see WTI crude was up 6% at one point and down 5% at one point? So that's the kind of day we've had.
Go figure. That's why we got Rob Thummel here, Senior Portfolio Manager at Tortoise Capital. They've got around $9.6 billion in assets under management. Rob manages several of the funds, including the Tortoise Energy Infrastructure Total Return Fund, up this year more than 4%. Rob, good to have you with us. Oil up 26% since May 5th. I couldn't believe this. I was doing this
earlier.
You were shocked. When we were preparing for this, I yelled across the desks to Carol, what is going on? We know what happened in the last week and why the tensions in the Middle East. Oil has moved up since then. But why a steady push higher since the end of last month?
Yeah, Doug, I think, Tim. Tim,
we were talking about it.
We were talking about Doug. I meant to talk to Tim. So what I think is
Doug
happening
Sioka, you can say thank you.
Shout out to Doug.
Talking about you.
Tim, what I think is happening is I think there's more certainty about the demand for oil, right? So the global economy continues to prosper. The oil inventories are really very low. So any disruption or any potential disruption is really going to cause a spike in oil prices. So obviously we had a big disruption or concern about a disruption. Actually, we have never had any physical volumes.
What
actually
exactly is the
impacted.
concern? Like with a skirmish between Israel and Iran, is the concern about the Strait of Hormuz? Is that what the concern is?
That's exactly it, Tim. That's
so explain
the
what
biggest
could
concern.
happen.
So the Strait of Hormuz is really important. So the U.S. is the largest producer of oil in the world, 13.3 million barrels. For context, we produce about 100 or consume about 100 million barrels a day. But
we consume. Okay, say that again. We consume about 100 million barrels a day.
Globally, 100 million barrels a day. 100 million barrels a day are consumed globally.
Okay.
20%, 20 million barrels a day, roughly, go through that Strait of Hormuz. So if that supply is cut off for some reason, and remember, Iran is very close to that strait. It's at the base of the strait. So if that's cut off for any reason, for any point in time, the world just doesn't have enough inventory to deal with that for a long period of time. So that's anytime there's escalating conflicts near the Strait of Hormuz, oil prices are going to go up higher.
Do we see that reflected in the delta between Brent crude versus West Texas Intermediate?
A little bit, yeah. I mean, sometimes, but they tend to move together because the U.S. can export oil, right? So if oil prices move higher globally, Brent, then typically you'll see WTI move up accordingly as well.
Okay, one more on the numbers just to set the stage for us. 100 million barrels a day is what we use as a globe.
Yeah.
You said the U.S. exports how much?
Well, the U.S. exports 5 or 6 million barrels a day.
And we produce?
The 13.
13. And how much do we use?
Well, we use a little around 15 to 20 roughly.
So, and we always have to import some because of what we produce here isn't necessarily the right type of oil for us to use.
That's right. So we import some from Canada and from other areas of the world as well because of the quality of the oil. That's right.
So we're not awash in oil?
Well, in some ways we are. Do you think? I mean, if you think about the conflicts we've had, Carol, I mean, these are massive. This is a massive conflict affecting geopolitical risk. But yet, oil prices are actually down, as you mentioned, and are really not that high relative to the conflict that the world is experiencing.
So my understanding is too that usage has been declining as well, right?
Well, global oil demand, it's slowing. It's slowing, right? Global oil demand is still growing. We set a record last year for global oil demand, the highest it's ever been. It'll be higher this year than it was last year. But you're right, global oil demand is slowing.
So what do you make of, we talked about global growth, and I just want to make sure I heard correctly, because the OECD, one forecast, has lowered its global GDP growth forecast for this year to 2.9%, down from 3.1% in its previous projection. I think initially when we started, you talked about that the global economy is kind of firing on all cylinders. Is that really the case?
Well, I think it's improving. I mean, the certainty related to the global economy, I think, with less concern about tariffs, right? And so I think that's oil prices really sold off earlier this year because of two things: uncertainty related to tariffs and the impact of the economy, and then the adding to the supply that OPEC Plus was adding. They were adding volumes, additional volumes, when maybe the demand wasn't there. That's one of the reasons why then the more certainty has really created the opportunity for higher growth in oil prices.
Rob, from your perspective, and you've got to make investments based on what's going on in the global energy markets. I mean, what do you think is a realistic longer term trend for WTI crude right now? We're right now just above $71 a barrel.
Yeah, so I think WTI right where we are, about $70 in the 70s is a long term trend. I think we're going to be lower in the near term, but I think longer term you'll see some adjustments made. The U.S. might be flat to even maybe decline in production next year, and so as a result of that, then you'll probably see demand go up for oil globally and domestically, and then the U.S. will have to then return to producing more.
I got a lot of messages coming at me from interested viewers and listeners who are curious about the international relations side of this, specifically Iran. They're not so concerned about the Strait of Hormuz closing because he argues that the Strait of Hormuz closing would hurt Iran more than it hurts the rest of the world. Is the incentive not necessarily aligned there?
Well, I think that's a very astute point. And the other point to be made related to that is the two largest consumers of oil, the U.S. and China, basically are really interested. And China in particular buys a lot of Iranian crude oil. So I think it would be very difficult for the Strait of Hormuz to really close. And so as a result, then I'm not too concerned either.
And then a question too about the escalation of tensions between these two countries. Does it move beyond Israel and Iran? And what are the implications if that does happen?
Well, I sure hope not. I mean, just for the world, right? For all of us as human beings. But from a it's really going to be difficult to disrupt the crude oil supply, basically. And so I just don't see the crude oil supply, because of its significance in growing the global economy. I just don't see it being disrupted. And so as a result of that, I just think oil can trade at a probably lower from here, which is a good thing for all of us as consumers, especially as we start the summer driving season.
So what's the smart investment play? I'm looking at the Tortoise Energy Infrastructure, and I'm looking, I think your number one holding, but correct me, I think this was as of the end of April, was MPLX Limited.
Well, that's one of our, we like MPLX. So really.
Yeah, go ahead.
That's an infrastructure name, Carol. So it's a high dividend yield. It's probably 7.5%, 8% dividend yield. It grows itself about 3 or 4% a year. So we like.
Is it the infrastructure that you like because it doesn't kind of matter? It's just you got to be moving stuff around.
Like the infrastructure and like natural gas. So we really think the energy sector is being redefined, and going forward, that natural gas will actually take the leading role as one of the larger supply growth commodities. Really, not only domestically but also around the world as well.
So I'm thinking about this in the context of sort of what Carol was asking about when it comes to quote unquote energy independence, or the way that American firms are being encouraged by the administration to drill and to explore for oil in the United States and extract oil in the United States. Do you see that happening during this administration, or will it not happen because the price won't get high enough?
Yeah.
Sustainably high enough.
Yeah. And Tim, it's a good observation. What I'd say is the U.S. is still the largest energy producer in the world. That's not going to change in this administration. It's probably not going to change in any administration. The U.S. has a lot of energy, a lot of cheap energy that it can not only use domestically, but export as well. Now, what we are going to see is, as you highlight, lower oil prices is resulting in now a lower rig count in the U.S., which will ultimately result in lower production in the U.S. And it's because of the price. So the oil producers need a little higher price, basically. They need oil to be in the 70s or 80s to really increase production.
But let's remind everybody, right? This is cyclical. And I think about, being up in Williston, North Dakota, in the Bakken in 2011, and it was just off the chart, and everybody's drilling. And again, I've said this a million times, the locals there are like, we've seen this before. So, this is just like semiconductors, right? There's, a demand and not enough supply, and the price goes to where it needs to be, and people start to infrastructure spend, build out, and then supply goes up and the price goes down.
The cure for high prices is high prices.
What?
The cure for high prices is high prices.
Yeah, exactly. So is that kind of where we are?
Yeah,
or not yet?
The cure for low prices is low prices. So you're right. So we're going to see less drilling. But here's the difference this time, I think, and I think this is really important for people to understand, is the companies themselves are in much better financial condition. Their balance sheets are much improved. And so you don't have to worry about these companies these days as much from a credit perspective. They're much more improved from a balance sheet perspective.
All right. But infrastructure is your play?
Love infrastructure. Love infrastructure and natural gas at Tortoise.
All right. Gonna leave it. Hey, good to see you.
Thank you.
Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Coming up next, we're talking about Amex, its Platinum card getting a refresh. We mentioned it last hour. The details, what you need to know on Bloomberg Business Week Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Global markets calming down today. Stocks rising, oil and gas, gold prices falling. Fears of a wider conflict between Israel and Iran are subsiding. Right now, the S&P 500 index higher by 50 at 6,027. That is a gain of just about 0.9%. The Dow up 280. We're off session highs up 0.7. NASDAQ up 1.5%. The 10-year 4.45%, with the 2-year 3.96%. Gold is tumbling 1.4%, 33.83 an ounce on the precious metal, while West Texas Intermediate crude is down 2.5%, 71.19 now for a barrel of WTI. Wall Street's looking ahead to Wednesday's Fed meeting. Amanda Lynham is head of macro credit research at BlackRock.
I would say the summary of economic projections has the potential to give us some incremental clarity on the reaction function. We think on the margin it will reflect a more challenging growth inflation mix. But keep in mind, this is just the median of all of the different committee members. It's not actually a cohesive projection from the committee, so we need to kind of discount that.
Amanda Lynham of BlackRock. 2 New York City court officers were wounded in a slashing attack at a crowded Manhattan courthouse, which appeared to be a targeted attack on law enforcement. The attack occurred in a security area where people entering the courthouse are screened for weapons. The suspect was taken into custody after being tackled by other officers. Recapping stocks higher, S&P up 53, up 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie.
Oh, if
do
they were
appreciate
behind
it.
the scenes.
Behind the scenes, that's where all the fun is, especially with Charlie Pellet.
I mean, these two have like similar glasses on.
We do, yeah. Well,
next guest.
Not Charlie and me.
No, not Charlie.
No.
Although he could at some point.
We definitely.
Yeah, totally.
Yeah.
I'm digressing.
Charlie's leaving. He's done. He's leaving the studio.
I'm out of here. You two play.
We're talking about Paige Smith, though. She's Bloomberg News consumer finance reporter. She's here in the Bloomberg Interactive Brokers studio. The reason we're talking to her is because...
Wait, can we just stop for a moment?
What?
The two of you look at the camera.
We're looking at the camera.
I'm looking at the camera. I'm just kind of loving.
Look straight into the camera.
I'm sorry for
Paige.
those who are listening on radio, but it's just they both have like the same glasses.
We got matching glasses.
It's really kind of...
They're not the same...
It's charming.
They're the same style. They're from the same company.
What can we say?
You do have
exactly.
great style.
Thank you.
Totally. Okay.
Paige, thank you. I appreciate that.
All right, now to the editorial portion of our show.
Okay. American Express teasing updates coming later this year to its travel-focused Platinum cards, announcing what it is called the largest investment ever in a credit card refresh. Paige Smith is Bloomberg News consumer finance reporter. She joins us here in the Bloomberg Interactive Brokers studio. Okay, $695 a year for one of these cards is a lot of money, I think, for a lot of people. It's a competitive space. When I hear refresh, and then I also read in your story that they haven't raised prices since 2021, I think to myself, there's a price hike coming.
I think we can probably read between the lines there. The last time there was a price hike, it was in July of 2021, and the price at that point was $550. So they certainly upped the ante. And at that point, think about it, we're just coming out of COVID, but folks were excited to use that Amex Platinum again. And I think it's fair to say, certainly we've seen some softness in certain portions of the travel spending for consumers, but I mean, I don't know about you, but it seems like everyone has travel plans this summer.
All right, so wait. So Amex is announcing what it's called its largest investment ever in a credit card refresh. What does that mean? Is the card going to be even heavier than it is already? Like, what is it?
We don't know exactly. They essentially said check back in the fall when the sort of more of the specifics will be released. But they're not the only ones teasing refreshes as well.
All right, Paige, why do this? Why not wait till the fall and say, folks, we just made the largest investment and here's what you're going to get?
I think people really like their Amex Platinum cards, and I think they've been asking executives when there will be this refresh. And Amex has been on a pretty rapid clip when it comes to these refreshes. There have been a few other updates that have come. Last year there were some updates, and it's pretty much every earnings. Steve Squeri, the CEO, gets on and says, hold your horses. There will be more refreshes to the credit card portfolio coming. So it kind of made sense. This is one of their trademark cards. Everyone knows the Platinum card to say, hey, ahead of earnings next month, don't worry, we'll be refreshing the Platinum at some point.
A refreshed card, does that mean it looks and feels different?
It could. It also could be more expensive, like you say.
Yeah.
But
that's not refresh. That's just fresh.
That's just fresh. But there could also be, they did call out that there will be 3 new Amex lounges this year. The 2 were already announced, but a 3rd was newly announced today, that there will be a new Centurion Lounge in Haneda Airport in Tokyo. And they also, in the statement, pointed out the reservation offerings and the travel offerings that Amex has and is really known for.
I like the credits. Like you travel, you shop here, you get credits. You're digital. That's what I like.
I think you have to turn them on, though, right?
You do have to turn them on.
Yeah, the airplane one is helpful. The travel one, the $200.
Yeah.
So it's like but you have to call ahead of time and say, okay, I'm going to be traveling with X airline this year.
Do you have to call?
If you want to change it from the previous year.
Correct.
Yeah.
Correct.
And that $200 travel credit was part of the last update as well.
Okay.
So they raised the fee, but you did get that $200 travel.
Okay, that's good. That's good. That's helpful. And is that the one with the Uber credit too? The Amex?
I know within the portfolio there are Uber credits. I don't remember if it's exactly with the platinum, but
Elizabeth says there are the Uber credits.
Yeah,
she likes the Uber credits. I think $15 a month.
I think I just
you can use those on Uber Eats too.
Yeah.
Okay, so that's the Amex side of things. The Capital One Venture X card is a competitor in Chase Sapphire Reserve. All I know is the Chase lounges at the airports have gotten really, really nice and competitive with the Amex lounges. Oh, yeah.
I don't know that I've been to a Chase
I think
lounge.
LaGuardia was the one that I went to recently.
Yeah. It's like the Hunger Games with these.
Is it?
These lounges.
Talk a little bit
really
about that.
Well, it's a very competitive space as coming out of COVID, like we said, everyone wants to travel and everyone wants these sort of premium experiences. And if you think about it, if you're a credit card company, that's a very attractive consumer base. It's folks who are always paying off their credit card at the end of the month, and they are maybe tapping into those rewards, but maybe sometimes they forget about those rewards. So you as the issuer are benefiting from those, that increased spend. They're spending more money. Those are higher dollar transactions. And the lounges are something that consumers really enjoy. They use them in the airports, and it is, if you think about it, there's an airport and there's a limited footprint, so it's very competitive for these lounges. And Amex has been known for their lounges, but Chase is moving in. The Delta lounges are also very sought after. It's it's a very competitive space.
All right, so maybe, but is the general narrative that get ready to pay probably more?
I would say that with the looking back at other refreshes that Amex has rolled out, certainly the fees have been increased, but there have also been more perks added. I think it was the gold card that was refreshed last year, that if you look at the benefits based on the fees, you pretty much make up for the fees if you take advantage of the perks.
Hey, just 30 seconds, because we have you in here. Wall Street Journal report on Friday about Walmart and Amazon exploring stable coins. We saw Visa and MasterCard drop as a result of this. Very briefly explain how this could disrupt credit cards.
It is an attempt, I would say, or an interest from merchants to sort of circumvent those expensive card fees that are associated with, you, Target, want to be able to accept a credit card payment. You, Target, have to pay to accept that credit card payment. But I think it's important to remember that this is still very early days for stablecoin technology infiltrating consumer payments. It is very early days.
All right. We're watching that one closely, right? Yeah, exactly. So nice. In like a couple of days, right? To have you twice.
Thanks for
That's
having
really
me.
fun stuff. Paige Smith, Bloomberg News consumer finance reporter, joining us here in our Bloomberg Interactive Broker Studio.
Okay, so Paige said lots of competition when it comes to high-end credit cards. So too when it comes to mobile phones and operators. And there's about to be more. President Donald Trump's family is getting into the mobile phone business with a Trump-branded service that will rely on pre-existing wireless networks and hardware that is, quote, made in America. Kelsey Griffiths is Bloomberg News telecom reporter. She joins us from our Washington, D.C. bureau. Kelsey, I want to start out with the logistics of such a thing. What do we know about who makes this phone, where this phone could come from, and then the spectrum that this service will use? Will it be, will it be leased from one of the 3 big mobile providers? What do we know?
Yeah, so I mean, you were asking all the right questions, and I think we don't have a lot of answers to a lot of the, I guess, big details of what the service is going to look like and how it's going to operate. What we do know is that it's going to run on all 3 of the major wireless networks through an MVNO agreement. That stands for Mobile Virtual Network Operator. And this is a very popular move for businesses that maybe want to reach these niches of consumers. We've seen the actor Ryan Reynolds do that with his Mint mobile service that eventually sold to T-Mobile for a very large sum of money. So there is a very recent precedent demonstrating that this is a pretty lucrative business model.
Wait, so I know the devil's in the details and we're still waiting to find out more. So is this a service that goes head-to-head with a T-Mobile or a Verizon or mobile service by AT&T? Because I'm trying to understand why, how this service from the Trump family will use network capabilities from all of the 3 major U.S. carriers, yet they all have their own services. So is it in direct competition, or it's going to be a little bit different?
So it's kind of a complicated business model, right? It's confusing on its surface because it does seem like it is this direct competitor to T-Mobile or AT&T or Verizon. But the reality is these companies have national offerings that target they don't target the entire population. So you have cost-conscious customers, you have customers in certain geographic areas, you have customers that might respond better to a celebrity personality, or they might be in the president's fan base, and they might be more incentivized to buy their mobile service from one of these smaller, quote-unquote, competitors. But at the end of the day, these competitors are still leasing the network capacity from the big mobile carriers, and the mobile carriers are still making money off of every single customer from these virtual operators. So there is still, a business model there for the big carriers.
There's a lot of places I want to go. We have like a minute and a half left with you. Hopefully we can do 2 more questions. Very briefly, the FCC regulates spectrum. The president's family is involved in yet another industry that he regulates, like crypto, for example. What's the scuttlebutt around the industry that you've been hearing about the president being a competitor in a space, or the president's family being a competitor in the space that he ultimately regulates through his FCC?
Yeah, so this deal, as far as I'm aware, doesn't require FCC approval because it is just leasing the network. It's more like a branding deal. So, I think that maybe there are larger questions around whether this company will be able to make money off of mobile subscriptions because of the president's brand and name recognition. But I don't think that's necessarily a regulatory question that the FCC will have to consider.
Okay, that's a good point.
Yeah.
And what about, very briefly, 30 seconds, hardware here? $500 for a mobile phone that's made in the U.S.? Can it be done?
I wish I had the answer to you to that question right now, but unfortunately, I think we're going to have to wait and see.
They told us, but that's what they said. They said this phone is going to be made in America, right?
Who's going to make it?
That's right.
Do we know
That's
who's
right,
going to
and
make
those are
it?
details that we don't have yet. If you go to the website, I think it's trumpmobile.com. You'll see some details there, but it doesn't really explain the full story.
The 47 plan.
4745. 47.45. 47th president, and also the 45th president. Yeah.
See, this has been thought through. More details to come. Kelsey Griffin. So appreciate Kelsey Griffiths. She is Bloomberg News telecom reporter out there in our D.C. bureau. Counting down to the close.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to hometitlelock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's hometitlelock.com/Bloomberg. 2 New York court officers have been wounded in a targeted attack at a Manhattan courthouse where a man pulled a knife on them at the security checkpoint. And now let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading in the green after Friday's sell-off, but off their best levels. The Dow's currently up 278 points. The S&Ps are higher by 50, while NASDAQ gains 1.4%. The U.S. 10-year yield is at 4.45%. Gold and oil are under pressure, but Bitcoin, that's higher by 3.9%. Among the main 11 S&P sectors leaders were tech and telecom. Utilities were under pressure, and leaders to the upside in the Dow, Cisco and NVIDIA, while McDonald's fell 1.8% and led to the downside. In deal news, Coty spiked 13% intraday on a report the company is looking for a buyer. And in the biotech space, Sarepta plunged as much as 49% after a second fatal case was linked to its drug. Wrapping things up, AMD jumped 10% and climbed back above the 200-day moving average. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 17 and a half minutes to go until we wrap up the trade on this Monday, June 16th. I just heard from Charlie and Bill Maloney wrapping up the trade for you as we get ready for the close. And yeah, we're off our best levels of the session, but we have seen some optimism, some risk on trade, if you will, Tim, come back into the market.
Well, let's get into it with Chris Fasciano, Chief Market Strategist at Commonwealth Financial Network. He's here in the Bloomberg Interactive Brokers studio. One thing that I think was surprising to a lot of people, we're going to zoom out and talk about the big picture trade, but as far as today goes, I think people have been really surprised at the market reaction during an ongoing skirmish in the Middle East, one that hasn't shown more trepidation when it comes to risk on assets. What gives?
Yeah, this has been a headline-driven market this entire year, right out of the gate, right? Whether it's tariffs, trade policy, the deficit, or geopolitical conflict. And I think what we're seeing today is there have been the stories out there that Iran has reached out to the U.S. and Israel to try to negotiate some kind of deal. So the market's view is that this conflict, which they were very worried about on Friday, looks like it's going to be contained. And as long as it's contained and doesn't impact the U.S. economy, which means higher oil prices, potential for higher inflation, and a concern for the Fed, they're willing to look through it and go back to what they believe the fundamentals are currently.
Chris, the velocity and volume of the news flow, be it from the White House or just around the globe, does it create opportunities or does it kind of make investors in your world say, I'm out?
I think it creates opportunities. My view is volatility always creates opportunities, but it's really hard when talking to our advisors and they're hearing from clients to get them to see that at a time like April, right? So I've lived through a lot of these market sell-offs, and what I always say is the catalyst is different, and that's what our advisors were hearing from clients in March and April. This is different this time. Catalysts are different. But the market action always tends to be the same. Which I mean by that is that it's driven by the future outlook for the economy and corporate earnings. So when you get a big sell-off, you can start to look at things like valuations and you can start to make decisions.
But having said that, you know, if it is different this time around and the catalyst, which is often from the White House, and to be fair, I think we can all say safely that the back and forth on some of the policies from President Trump and his team, but largely from the president, make it difficult to figure out what impact will there be longer term on corporate earnings and all that good stuff?
Yes.
And so that to some extent is, well, wait, how do I make a decision when the variables are still up in the air?
Right. I think that's absolutely true. But one of the interesting or unique things about policy compared to like the financial crisis is that policy can change. And that's what we've seen, right? Tariffs are announced at very high levels. It appears as though the president is using tariffs as a negotiating tool. Market reacts negatively, and the policy gets changed, and we have a pause in effect.
Are you concerned about the lack of actual concrete trade deals that have been announced? And by I mean like none out of 90. Right, 90 deals in 90 days was what we were supposed to see, right? The 90 days is
July 9th is coming.
that's like less than a month away.
Yeah, July 9th is coming, and I think we all know that the way deals work is they get negotiated at the last minute, right? And I think that's what you're seeing. The G7's going on, right? And I've seen stories that the president is meeting with his counterparts from the EU and Canada and Mexico. So I still believe we're going to get some kind of headlines, but I don't believe we're going to get fully negotiated deals by July 9th. What the market wants to see, something similar to what they saw with the UK, which is a template that says, here's what we agree.
What would you call? Would you call that a template, a framework? What would you call it?
I'd call it a framework.
Okay, not an actual trade deal.
No, you can't negotiate trade deals that quickly. I mean, we look back at like 2018. It took almost 18 months to negotiate phase one with China back then.
So like an MOU, right?
Yeah. Yes. Exactly.
And then, hey team, go figure it out.
Right. Exactly. I
Get
think
it all
we're going to
written
see
down.
those as we approach July 9th.
So glass half full, glass half empty.
Glass half full. Yeah, I think this is a fascinating market, right? Because I say if you're a type of person that doesn't look at your statement every month and you looked at it in January and you looked at it last week, you'd say nothing happened. You'd be wrong, but you might be better off than all of us.
Where do I find that attitude to just like not even? The problem is I'm in the markets every day in terms of news.
Yes,
absolutely. But I would argue that sometimes it's hard to erase the whipsaw that we got.
Yes.
And it's a reminder that we do have an administration, a president in particular, again, I'm not talking out of line, that can say one thing and then do a 180.
Right.
And so we're not done. This administration goes on for another 3 and so many, 3 years and so many months.
Yep.
And so things can change again.
Right. So the way you framed the question, I said half full because I look at it, we're basically back to where we were in January in terms of market levels and valuations, right? So,
yeah, but what a ride.
Right. It's been a wild roller coaster. But that makes me cautiously optimistic that going forward, the economy, which had so much momentum coming into the year, that it was able to persevere through the headwinds, will continue to grow in the back year. Corporate earnings will continue to grow. That will be supportive for equity investors. But to your point, I don't think volatility is going away. And I think there are risks out there that investors need to be cognizant of.
How would you characterize the economy right now? The consumer powers this economy. There are concerns that cracks are starting to form. Do you agree with that?
There are concerns cracks are starting to form. There's no doubt. We saw that with consumer confidence that basically cratered in the first half of the year. Although on Friday we saw it tick up after the pause with China. But the way I look at it is the driver of the consumer is employment and jobs. You are seeing that slow, but you're still seeing it at levels that should be supportive for the consumer, which means that they will continue to spend money, which means the economy should continue to grow as long as we continue to get progress on tariffs and we got a budget bill passed that could begin to add stimulus into the economy late in the year as we enter next year.
Just real quickly, are you worried though, again, this is a question Tim and I ask about the U.S. being uninvestable and that investors moving away from dollar-based assets. U.S. importers are increasingly being asked by their foreign counterparties to settle transactions in currencies other than the U.S. dollar, such as euros, Chinese renminbi, Mexican pesos, and Canadian dollars. I mean, that's happening.
Yes, as I said, there are a lot of things to worry about, and I think investors need to be cognizant of them. To your point, is the U.S. uninvestable? I don't believe that, but throughout this year, I have been talking to our advisors about increasing their international exposure because not only is it cheap, but we're starting to see improvements in fundamentals, and I think that will continue to drive that trade.
All right, Chris Fasciano, Chief Market Strategist at Commonwealth Financial Network. Thank you so much.
Good to be here.
counting down on the close.
Yeah, that's coming up next. This is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, just under 7 minutes to go until we wrap up the trade on this Monday. It is an interesting week, as you know, the Juneteenth holiday on Thursday, so only 4 days of trading, but we do have a Fed meeting and a lot coming out at investors. I'm curious to see what the Fed has to say this week.
Yeah, I'm curious to see as well. I know Mike McKee is already down there. Does he always go on Mondays? I feel like sometimes he hangs out with us in New York on Mondays.
I think a lot of times he goes down, I feel like Monday afternoon, and then he's there for the 2 day to start on Tuesday.
Wonder if he's trying to flee the Northeast, one of the areas that's affected by the salt.
Could be.
Salt caps.
Maybe he's meeting with Fed Chair Jay Powell. Who knows?
Carol.
I'm making this up.
Carol.
I'm gonna get in trouble.
R.I.P. Mike McKee's inbox. Okay. Chill.
Mike is like, he's that kind of a dude. Like,
oh yeah.
He talks with all the Fed officials. Kind of loving that. Where do you want to go?
I want to go to salt.
It's amazing with everything going on. You and I were just kind of acknowledging, boy, we haven't really talked about what's going on in this big spend and tax bill.
So the Senate, this is one of the most read stories on the terminal in the last hour.
Yeah.
The Senate's version of President Trump's tax bill calls for a $10,000 cap on the state and local tax deduction, a placeholder figure as Republicans remain divided over this valuable tax break.
Matt Miller, I hope you've taken your heart medicine.
I think I sent it to him.
I know you're going to get pretty upset about that. I'm pretty upset about that.
I hope he's not driving.
I hope he's not driving. Pull over, Matt. Pull over.
The draft bill, slated to be released later on Monday, includes the current $10,000 SALT cap. That's according to a person familiar with the matter. The Senate will continue to negotiate the deduction as it aims to pass legislation by a self-imposed July 4th deadline.
Just a reminder, House version, of the bill calls for a $40,000 SALT cap with some limits for claiming the write-off based on income. Some House lawmakers from high tax states have threatened to block the legislation if the Senate lowers the cap. Listen, we know these kind of massive spending tax bills, there's negotiating that goes on. So I'm just assuming that they're all getting ready for a battle to kind of like, you want this? Well, then I get this. So let's see what happens. But yeah, pretty interesting.
Representative Mike Lawler of New York called a $10,000 cap dead on arrival. That's all caps. Fellow New York Representative Nicole Malliotakis said the Senate draft is, quote, insulting and a slap in the face.
I think at the end of the day, we'll find a landing spot. Hopefully that will get the votes we need in the House. That was a compromise position on the SALT issue, that from Senate Majority Leader John Thune. I mean, right, this is what happens. The negotiating begins.
I don't know. This is the president's signature legislation, right?
Yeah,
For his term.
Yeah, I would, yeah.
Does it pass?
Yeah, I don't know.
He has the Senate, he has the House. The House sent its version. The Senate doesn't seem to know where exactly it wants to go.
No, exactly. House Speaker Mike Johnson, though, said he's calling on the Senate leaders to preserve the House deal as much as possible. Raising the SALT cap to the House level would cost some $350 billion, and Senate Republicans would prefer to spend that money extending temporary business tax breaks they argue are more pro-growth. I don't know. You got tariffs. We don't know where all this lands.
Senate Majority Leader John Thune said on Fox News Sunday there's no real interest among Republicans who hail from low-tax states to raise the SALT cap to the $40,000 level called for in the House-passed version. He said, quote, I think at the end of the day, we'll find a landing spot. Hopefully that will get the votes we need in the House, a compromised position on the SALT issue.
Yeah. Well,
no real interest from low tax states.
I mean, I get it. The horse trading begins, but I'm sure there's something that those low tax states want. I don't know. I don't know what's the negotiation.
Where does the money from the federal government come from in terms of taxes, like geographically?
A lot comes from the East Coast and the West Coast.
Okay.
Are you trying to make it?
I'm just curious. I'm trying to get you. I'm trying to.
Like, hey, everybody, where does most of the tax money come from?
I'm trying to get you riled up, Carol Masser of New Jersey.
I'm just saying, like, everybody's like, wait, we're subsidizing the high tax states. No, there's a lot of money that comes from all of us. Gladly.
Just
happy to help.
Just pushing buttons. That's what I'm doing.
You are pushing buttons. He's really good at that. All right, folks. We know some other people who are good at pushing buttons. They're over on the TV side. We're going to head over to that. Cut you down to the close on this Monday. The closing bell coming your way in just a moment.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell with a global simulcast. It starts now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenevec, they're in the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. A bit of a reversal, Carol Masser, from what we saw on Friday with a big sell-off, and today it's a big buy the dip.
I know, and I'm trying to figure out like how much has really changed. But having said that, I kind of just keep digging down. There's a lot of gainers in today's session. Semiconductors in particular, guys, up almost 3%. So really some outperformance there today.
I guess the optimism about perhaps Iran wants to talk to find some resolution to this got people more optimistic, Scarlett, but still it seems surprising to me that in an environment such as this, where we are seeing these two powers go against each other, the skirmish in the Middle East, that there is some buying that we're seeing today.
Yeah, it seems the path of least resistance for equities is to continue to go up, whereas the path of least resistance for bonds is for yields to go up. I mean, we've seen this equity market turn around, but yields continue to be higher for a second day.
Yeah, and JP Market Intelligence actually, though, changing their call today, saying that they're now tactically going from tactically bullish to cautious because of sort of the moving away from a buy the dip moment, perhaps. Some saying, look, we didn't have enough of a sell-off to have a really big buy the dip moment.
And that gets to the question is whether we do need to sort of retest back down to some correction levels before you get that reset higher. It'll be interesting to see how those analysts, strategists, expectations, their price targets for the full year and for the 12 months, whether that starts to creep back up given some of the tamp down in the trade rhetoric. We get the closing bells here on this Monday afternoon. Green across the screen with the Dow Jones Industrial Average up more than 300 points, or about 0.8%. The S&P 500, a 50-plus point gain on the day. It opened above 6,000, and it's going to close there up about 0.9%. The NASDAQ indices each up about 1.5%, while the Russell 2000 closing out the day higher by 1.1%.
All right, to the S&P 500, back I go. Most names in the index higher today, Scarlett. 364 names gaining ground, 139 to the downside.
All right, let's take a look at the IMAP. The 11 sectors in the S&P 500, 7 sectors are in the green, including the largest ones, communication services, infotech, and consumer discretionary. That reflects all the Mag 7 sectors, and in fact, all 7 of the Mag 7 names are gaining ground as well. So you have 4 sectors gaining at least 1%. The laggards on the day are utilities, healthcare, and energy, each down anywhere from 0.3% to 0.5%.
All right, guys, let's get to some of the individual gainers in today's session. There was a lot to choose from. AMD, that's your number 1 gainer in the NASDAQ 100, number 2 gainer in the S&P 500. Stock up 8.8%. You really did see a broad rally in the semiconductor space, but Piper Sandler said products unveiled last week by AMD were positive and expects a snapback for the GPU business in the company's fourth quarter. You also had BNP Paribas come out, an analyst there saying in a call on AMD, held with Friday with analysts, that they sent a reassuring message heading into results next month, with AI traction increasing for AMD's Instinct GPUs. So some really a lot of optimism there when it comes to AMD. Estée Lauder, next name for me, number 1 gainer in the S&P 500, and that stock up just shy of 11%, so pretty much closing at its best levels of the day. China retail sales grew 6.4% last month. That's the fastest pace since December of 2023 and exceeded all estimates. So those names like an Estée Lauder that have a big Chinese exposure really gaining today. I should point out Nike, Starbucks, Canada Goose also gaining in today's session. We also should point out that yesterday some sad news from the Estée Lauder community. That is that Leonard Lauder, which was one of the sons of Estée Lauder, the founder of the company, passing away. A long time, obviously, in terms of running and strategy for that company in particular. And then I just want to mention WBD. I hope I gave the right ticker. Warner Brothers Discovery. Did I mess up?
You messed up.
I messed up.
Hey, but it's still a gainer.
I realized it. Yeah, but that's not where I want to go. But anyway, WBD, Warner Brothers Discovery. That is your number 2 gainer, I believe, in the S&P 500. Forgive me, Finley, I messed up. Up 7.3%, Warner Brothers Discovery, and that's after the company won enough support from creditors to overhaul its debt as part of a plan to split the entertainment giant into 2 separate companies. I'm so sorry.
Can I just add an honorable mention? Because when I ran the most function, the number 1 gainer across all of the tapes was some tiny biotech company, Regencell, which I might be mispronouncing. It was basically a penny stock about a month ago. It's now trading at $59 a share. Wow. It had a big stock split today, 38 for 1. It rallied as much as 400% on the day. This was a stock that had a market cap of a few $100 million just a few weeks ago. It now has a market cap of almost $30 billion today.
What's the short position on that puppy?
I haven't looked, but I'm sure it must be
now.
Yeah.
Not now.
Wow. Okay, let's get
Which
to
point out
some
it has no profit,
decliners.
no revenue, or anything else to it.
Yeah.
So,
That's a good honorable mention.
Good honorable mention. Romaine always says the good honorable mentions. Hey, let's start with Lockheed Martin in terms of decliners today, down 4%. This news just breaking after, and it's not the reason why it's lower. Lockheed Martin did name a new chief technology officer. That just crossing moments ago. We did see U.S. defense stocks erase earlier session gains that we saw today. This after we heard from the president, who said Iran wants to talk about de-escalating the conflict with Israel. Northrop Grumman and L3 Harris Technologies also fell in terms of defense stocks today. Lockheed Martin, though, the worst performer on a percentage basis in the S&P 500. Also moving lower today, energy names among the worst performing sectors in the S&P 500. Diamondback Energy down 2.5%. Energy companies also falling, with oil prices on expectations there would be less disruption to oil supplies. Diamondback Energy, the worst performing energy name in the S&P 500. And then a biotech name that fell a lot today, Sarepta Therapeutics, down 42%. The company's gene therapy for a rare muscle disorder has been linked to the death of a 15-year-old boy. It's the second patient to die of acute liver failure while being treated with the therapy. Shares fell today by 42%.
Ooh, well, on that note, thanks, Tim. I guess I'll go to yields. So there was a sell-off in the bond market pretty much all across the curve. The back end getting hit the hardest with the yields up by about 6 to 5 basis points. 20-year auction went off without a hitch. But just so interesting when you have these kind of headlines and you're still seeing selling in the treasury market. Same with the dollar. Just raises the question, at least for me, like where do bonds and the dollar fit as a safe haven asset in your portfolio? I know we're all taking a breath after Friday, but there are still so many risks out there. And yes, they're hard to price, but at least we know that they come from Iran and Israel right now. And yet still we're not necessarily 100% pricing that in at all.
All right, guys, we're going to get to, obviously we have a Fed meeting this week. They'll be looking at the labor market. We're looking at the labor market on this Monday because if you are a recent college grad, it's not so great, pretty bad, in fact. Recent college and high school graduates are facing an unemployment crisis. This is coming from the Wall Street Journal today. Overall national unemployment rate, around 4%. New college grads are looking for work. We're talking about 6.6% unemployment rate over the past 12 months ending in May, and that is about the highest level in a decade, excluding what we saw during the pandemic employment spike. So not so great.
As Carol mentioned from the Wall Street Journal, this data from the Labor Department, though, people who are between the ages of 20 and 24 who are looking for work, who have at least a bachelor's degree, young graduates face a higher unemployment rate than their counterparts who've been in the workforce longer, according to the journal. But the gap now is growing wider between adult workers and the young. So those ages 35 to 44 with bachelor's degrees had a 2.2% unemployment rate over the past 12 months. That was up from 1.8% over the prior period.
And legit question on like how much is distorted too about all the layoffs for Doge and government workers, right? Like there's a lot of individuals recycled into the market now. So how does that wind up sort of clouding and messing up the picture?
Yeah, and these young, fresh graduates are not even counted in the unemployment numbers just yet. So you could watch that unemployment rate that the Fed focuses on so carefully tick higher later on this year. Another story we're following is Meta Platforms finally monetizing its WhatsApp unit. It's going to start showing ads in the Updates tab of WhatsApp. I've never used the Updates tab, so this would allow users who don't want to see ads to just continue using WhatsApp for messaging and calling without seeing them. What's the point then? Who's actually going to go in and look for that Updates
There's like
tab?
channels and stuff
Wait,
on the Updates tab.
This tab gets 1.5 billion visitors per day.
But why are they going there? I don't understand.
They're looking for updates.
No, but if you look on it, there's like channels and you can subscribe and follow, and there's like,
And now
for
there's
some reason
ads.
I have a lot of sports channels on my Updates tab.
They don't know you then.
They don't know me at all. Yeah, they're clearly not tracking me, so there's that.
That's not good targeted advertising for Alex.
Remember when Meta bought WhatsApp back in 2014? I remember this because, Scarlett, I was subbing for you on surveillance
Oh my
because
God.
you were off and everyone was like, what is this company? This was like 5 people worked there and it was like per head they were paying a ridiculous amount of money. Finally, they're going to monetize it.
Well, years later, all the bankers know what WhatsApp is, and so do the regulators.
I look at Meta. It was up almost 3% today, man. They're up almost 20% year to date. I feel like they are kind of firing on all cylinders. I mean, just figuring out ways to monetize kind of all of their platforms. So I guess investors like it. I don't like ads. I'm tired of it.
I want to get away from ads.
Me too. Me too. All right. That's a wrap. Our Monday's over. Yay, almost. That is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Alex is heading out. Scarlett and Romaine continuing on the close. Be sure to stay with them or stay with Tim and I right here on Bloomberg Business Week Daily. We'll see you tomorrow, guys.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Masser. I am Tim Stenivek. President Donald Trump said Iran wants to talk about de-escalating the deadly conflict with Israel, but Prime Minister Benjamin Netanyahu signaled that strikes will continue. Asked about reports that Iran wants to work toward a resolution, Trump responded, quote, "Yeah," and added, "They'd like to talk, but they should have done that before." We've got joining us Alex Vitanka, Senior Fellow at the Middle East Institute. This is an organization that has the mission, in their own words, to, quote, increase knowledge of the Middle East among citizens of the United States and to promote a better understanding between the people of these two areas. The organization has received funding from various sources, including corporations, foundations, and various Middle Eastern governments, such as the UAE and Qatar, as well as the U.S. government. Alex joins us from Washington, D.C. Alex, good to have you with us this afternoon. I want to just start with where you see this conflict going in terms of escalation. Has that peaked and we're sort of in the de-escalation phase right now, or does the world need to buckle up and get ready for more?
Tim, great to be with you and Carol. Look, I have to be starting up by saying I have to be extremely humble. A week ago, if you had asked me that we could be finding ourselves where we are right now, I would have said impossible. But here we are. So in terms of where we're going, I don't know. But here's what I see is happening. As you just, told the listeners, Prime Minister Bibi Netanyahu of Israel seems to be moving from the problem being about Iran's nuclear program to the nature of the Islamic Republic. In other words, he's after regime change. Now, we do know that President Trump kind of gave Israel sort of a green light to go ahead and do what they're doing in terms of striking Iran. But there's a big question mark whether he would sign up for an open-ended regime change project in the Middle East when Iran is by far the largest target, if you will, for Israel in that country's history. So big question mark whether Israel can take President Trump down that road. The Iranians, for now, seem to want a de-escalation, as you put it, Tim. They want the Israelis to stop attacking them, and they're promising to stop attacking Israel. But that's because they're in a very bad place. They are shell-shocked. The regime has lost prominent members. And let me just wrap up with this. They know they don't have their own people behind them. And that's the worst place you can be if you are the Islamic Republic today.
How do you really resolve conflict in a region that really, if you go back, I mean, it's just war and violence and warfare. I mean, it's an area that has just been in continuous conflict, Alex. So I don't know, how do you really bring peace to the region?
Thanks, Carol. That's a big question, but let's be, if you indulge me, a bit fair to the Middle East. When you look at the history of the European continent, they were in a much worse place just 150 years ago. And, we all remember what happened First World War, Second War. In fact, Middle East has never experienced anything on that scale. Israelis, Iranians, Arabs, and Turks, they all have good reasons to want to coexist. I'm pretty sure that's the place Middle East will get to eventually. But right now, obviously, that's a distant prospect. But I mean, the promise right now is by Netanyahu and Israelis that if you get rid of the Islamic Republic, then you've taken a giant step towards normalization in the region. That's a big promise. If Netanyahu can deliver for it, I think a lot of people would cheer him on. But it's a big if. Can he? Or is he just hoping that happens? So
what would sorry, I just want to jump in. We only have a few minutes. What would a regime change and, quote, as you mentioned, getting rid of the Islamic Republic, end quote, in Iran look like?
So look, I mean, that's the big question. You don't really necessarily have an organized opposition ready to be flown to Tehran and take over. You do have individuals like the Shah's son, Reza Pahlavi, who is in the United States, who has an agenda, who has supporters. Is a question mark whether he will be able to sort of rally the whole country in Iran behind him. I suspect he will have a very good chance. He's probably the best candidate. But look, again, United States has the history of Afghanistan, Iraq. This country doesn't want to take on another nation-building project. So I think before we get down there, the Iranian people need to show signs that they're capable of actually being the captains of a ship like that if Iran goes from being what it is, Islamic Republic, to something very different. They need to play a much more active role.
And look, I have not been to Iran, so I do, and not many Americans have. I know some Americans who have been there. But are they given the opportunity to actually have that privilege, given the society that they live in right now?
Look, if you are a leader in the Islamic Republic today, it's not about really privilege. It's a fact that you're being targeted by the Israelis who are taking senior members of the regime out. It's about survival. It's about recognizing that maybe this regime's time is up and it's time to jump and change course. Ali Khamenei is 86 years old, the supreme leader. A lot of younger people in that regime who probably can look forward to decades of living, and they know they've lost their own people. And this what's happening right now could be the moment for a lot of folks to defect, but it's a big if. I don't know. They might decide to fight and seek martyrdom, and some of them claim that's what they want to do. Time will show.
How do we get there? Who are the leaders that get that to happen?
Well, look, you have United States plays a key role here. United States can mobilize obviously a lot, but again, President Trump has a political track record that says he's not in the business of nation building. So unless somebody can convince him that this is not going to be Iraq, this is not going to be Afghanistan, that Iran that's free, that has the economic potential that it has, can look after itself and will cease being a pain in the neck for the United States and cease to exist as a threat to Israel. But again, the Israelis also have to, I think, convince President Trump. They have done a great job on a tactical level. They've done that in Lebanon. They've done it elsewhere. But going from the tactical, the assassination part, to actually delivering an Iran that's free and sort of secular, not a threat, and not ends up in a civil war, which is in nobody's interest, that's a bit of a leap. So we have to wait and see. But yes, absolutely, to your point, Carol, leadership does matter. It does matter from the U.S. side. It does also matter in terms of among the Iranians, both those who in the regime who could defect and those in the diaspora who are looking to take the country a different direction. And they need to come up with an agenda that's convincing and that can mobilize around the cause of this is the moment to take Iran out of where it's been for about half a century and go in a very different direction.
Alex, you were born in Iran. You were raised in Denmark. You later moved to England. Do you still talk to folks who are in Tehran right now? Have you heard from them in the last few days?
Yeah, I don't have necessarily immediate family members anymore. I left 40 years ago. But yeah, absolutely. That's what I do. I keep...
what are they telling you?
You know, I haven't had anyone that I know that has actually ended up being killed. So the numbers in terms of civilians are about 200 or so, which, you know, it's not a small number. That's 200 souls. It matters. But it's not that everybody's fearing that this could be indiscriminate and you know, the city of Tehran of 10 million people is still, as far as I can tell, functioning. But let me also say this, Tim and Carol, because it's really important. Even average Iranians who might be very upset about Israel striking them, because a lot of people say that wasn't really necessary, could have been handled differently. But very quickly, the conversation goes from why Israel did that and whether it was justified or not to why did we end up in the place we are in. And that takes us to the supreme leader of that country, Khamenei, and his policies. And, you know, the bottom line is this. If you repress your own people inside of Iran, which Khamenei has basically done, why would he be any different if he became more powerful in the region? So that's a problem.
So, Alex, 20 seconds. Are you saying that maybe, unfortunately, loss of life, never good, but something like this maybe did have to happen from Israel in order to maybe move this along? And forgive me, just about 15 seconds.
I have no idea if it was a good thing to happen, but it could become a pretext, an opportunity with the right sort of vision to go forward in a different direction.
Alex, thanks so much. Alex Vitanka, he's Senior Fellow at the Middle East Institute, joining us from Washington, D.C. More to come right here on Bloomberg Business Week Daily.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. An update today for the Dow, the S&P, and NASDAQ. S&P climbing 56 points to 6,033. That was a gain of 0.9%. The Dow up 317, up 0.7%. The NASDAQ Composite Index up 294. For NASDAQ, a gain of 1.5%. 10-year yield at 4.45%. The 2-year, 3.96%. Spot gold down $47 the ounce to $33.84, down 1.4%. And West Texas Intermediate crude now at $71.25 a barrel. Crude tumbling by 2.4%. Victoria's Secret's being targeted by another activist investor seeking a shakeup of its business. Barrington Capital Group has built a stake of more than 1% in the retailer and is urging it to make changes to its board and strategy. Victoria's Secret up today by 2.4%. Recapping, stocks higher, easing tensions in the Middle East. S&P up 56, a gain there of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Carol, you have traveled abroad in the last year.
Did I?
Yeah, you did. You went and visited your daughter.
Oh, yeah, that's right. Yeah.
You came back to the airport.
Thanks, Tim.
Yeah, no problem. You came back to the airport.
Yeah.
You're in line, Customs and Border Protection.
Totally.
You go up to them. You give them your passport. They say, you say, I'm Carol Masser. And they say, how do we know you're Carol Masser?
Facial recognition?
Well, facial verification.
Ah, there's a difference.
There's a difference. Andrew Budd is going to explain it. And Andrew Budd's product is actually used by Customs and Border Protection in that exact situation to verify that we are who we say we are when we are crossing borders.
I love that you said that because it's an interesting designation. So let's get to it. Andrew Budd is with us. He's founder and CEO of iProve, and he joins us from Amsterdam. It's good to have you here, especially as we are continuing to embark on our new world order thanks to AI. Tell us a little bit more about your company and the importance of this distinction between facial verification versus facial recognition, because they're very different things.
They are very different, and it's very easy for them to be confused. Look, facial verification is about empowering the person, empowering the citizen. If you can use your face to secure your own identity, if you know that it's happening, if you've consented to it's happening, if you get personal benefit from its happening and your privacy is protected, that's facial verification. That's empowering the citizen. Facial recognition is about identifying people, often without their consent, often without their knowledge. It's a completely different thing, and that's about empowering organizations. It's about tracking people. Facial verification is about empowering. It's about enabling you to use your face as a security credential. And it's a great security credential because it can't be stolen, it can't be lost, and it can't be shared.
So is Face ID on an iPhone, for example, is that facial recognition or facial verification?
That's facial verification, very much facial verification.
Facial recognition is essentially used for security purposes by third parties then? How would you define facial recognition?
Yes, facial recognition is really, in our terms, about surveillance. It's about identifying who the person is. Facial verification is when I start by saying, "Hey, I'm the owner of this phone. Hey, I'm the owner of this passport. Hey, I'm the owner of this enterprise account, and I now want to prove my face. I want to use my face to prove that I am who I've claimed to be." But with facial verification, I start by claiming who I am. In facial recognition, the system recognizes me.
Angie,
Very different.
When my doorbell camera says, "Hey, I recognize somebody familiar," and it's the UPS delivery person, and then it says, I don't know, it's your husband or it's your wife. Is that facial recognition gone wrong? In other words, like it's picked up some cues and there's some familiar, I try to understand that. Yeah.
So ask yourself always: does the subject have agency? Does the subject know it's happening? Have they consented to it happening? And are they getting personal benefit from it happening? Those are the real questions. So when you turn up at the border with CBP, we have systems installed in nearly a dozen airports around the US for global entry, and now increasingly also for US citizens at Orlando, for example. You turn up, you can choose to go through these systems that are based upon facial verification. You're asserting your agency by choosing to go to go and present yourself. You don't have to.
Yeah.
But if you do, it's a lot faster, it's a lot simpler, it's a much better experience, it's a lot more convenient.
Well, let's talk about a little bit about the business and the solution, because as I mentioned, the technology of iProve is being used by Customs and Border Protection at entryways at airports, for example. You've raised about $70 million. You've got employees all over the world, the US, UK, Latin America, Asia Pacific, and more. How does the technology work?
So most of what we do actually involves verifying that people are whom they claim to be when they're not physically present, when they're at home on their couch, for example, and they're trying to assert their identity for the purposes of opening an account, or maybe, very crucially, resetting their credentials when something's gone wrong. When a person's on their couch, it's really very difficult to know whether they are whom they claim to be. You can look at them, you can use your mobile phone to stream video to a central system and check that they look that they look like who they claim to be. But how do you know they're real? We live in a world of AI, of deep fakes, when it's extremely straightforward to put a digital mask over a person's face and pretend to impersonate somebody. We stop that impersonation. We can detect very accurately when a deepfake is trying to be used to impersonate someone.
Come on, Andrew. We've all seen like the Mission Impossible movies or something like where those deep fakes.
That was a long time ago too.
Right? Are used
it was like 20 years ago, 30 years ago. Nowadays, it's a lot better.
Right, exactly. Like the technology just gets better and better. So, I mean, how do we make sure the facial verification systems stay ahead of, you know, the AI that is creating those deep fakes in terms of their complexity? How do you do that?
That's the central problem that we solve. That's what we've built a global business doing, and we've been doing it now for quite some time. Two things we do. One is we change the physics of the situation. We illuminate the user's face with a rapidly changing sequence of colors from the screen of their own device. It's an unpredictable sequence of colors, and it illuminates their face. And while those colors are illuminating their face, we stream video back to our servers where we look at how that screen illumination, those changing colors, reflect off the user's face. They're unpredictable. The attackers can't know what it's going to look like, so they can't pre-prepare some beautiful deepfake. That's one element of it. And then the other is we analyze everything that's happening worldwide all the time. We filter the systems and we study, so we can detect the attacks. We can detect if a foreign power, for example, is busily mounting a set of experiments, and we learn from them. And we learn more from them than they learn from us. So we stay ahead because we have visibility and they have no visibility. You know, that information advantage enables us to win.
Carol and I were talking ahead of this when we were preparing for this, and we've been traveling a lot, so it's on our mind. But we were members of Clear now because we are on the plane a lot. Sometimes it's faster than the traditional security line. Sometimes it's not.
It is.
Depends on depending on where you are. But sometimes we can get through security without even showing our plastic IDs. Does Clear use a system such as iProve?
I can't comment on Clear. Clear have their own technology. They have a very sophisticated technology. What I can say is that when you go through global entry in places like Newark or Los Angeles or Miami, you walk up to an iProve terminal. You don't do anything. You don't have to pull out any card or any identification system. Your face is captured and it's matched by CBP itself against their traveler verification system. You've already in the past given them all of your details, so that you're expected because you are coming in on a particular flight, and they kind of go, oh yes, that's Andrew Budd. We were expecting him. We know his details because he's given them to us, and we had them already. He looks like he's supposed to look like. Go forward. And the rate at which people can be processed like that is awesome. In the places where we've been installed, we've eliminated most of the queues. Or cut
what happens if I don't look like I looked in the photo or the documents that I provided to the government maybe 5 or 10 years ago? What if I've aged? What if I've have a different hair color? What if I decided to get a piercing? What if I had a lot of work done to my face?
One of the great advantages of face verification technology is that it works extraordinarily well, and it works a lot better than people do. There was a study done about a decade ago by a university, which showed that the performance of really skilled passport officers was of a level that is now about 100,000 times less good than a modern face verification system. Face verification systems tend to be relatively indifferent to face furniture, as we call it, beards, glasses, piercings, and so on. They're really very good at matching people.
Hey, one thing I want to just ask you before we get a little bit more into the business, just quickly, is a face better than a fingerprint?
Yes, absolutely.
Why?
Because they solve two different problems. When you're trying to verify somebody, you want to make sure that there's a good match. And you're not trying to figure out which of 7 billion people in the world this is. You know, they're expecting you, and the challenge is, and you just have to make sure that you look like the person accurately. And a face is extremely good at doing that. But the reason a face is better is the real way that these things get attacked, especially remotely, is by forgeries, copies. Okay. These things are, and it's much easier to detect it's much more feasible for us to detect a forged or deep-faked face than a forged or deep-faked fingerprint, because there's so much more information, there's so much more texture, there's so much more depth, there's so much more information around a face. The ambient illumination is very important. So you get much more information from a face, which makes it much more reliable to detect whether a face is real or not.
Interesting.
Are we going to start to see this type of technology being used in more places than just unlocking something on our phone or getting through the line at the airport?
Oh, yes.
Where?
Absolutely. You're going to see this. So already, if you want to set up bank accounts in many parts of the world, you go through, you iProve yourself. Remotely, you iProve yourself to do the Know Your Customer, KYC thing, to make sure the person setting up the account is genuinely the person that they claim to be, and not somebody being an impersonating money mule who's going to launder money. That's already happening in many parts of the world, not so much in the US yet. For enterprises, we're going to see staff doing this, both at the time when they're hired and also when they have to reset their credentials. When they're hired, there's now a real problem in the United States with impersonators, particularly members of the North Korean Secret Service, impersonating American staff and being signed up and given jobs to work remotely. There was a very public case in the summer of last year. Now, the CTO of Mandiant, which is a cybersecurity company, says that literally every Fortune 500 company has at least dozens, if not hundreds, of job applications from North Korean IT workers whose faces have been deepfaked to look like American staff when they're not. 300 US companies have been scammed by a woman who pled guilty in February for having run a scheme like this. So it's a huge thing. So our technology will make sure that the person who is being hired remotely is whom they claim to be. And then, when you come to reset your password, you haven't got any other way to assure yourself.
All right, got it.
So that'll be used for that as well.
Hey, stay in touch. Love to check in with you again in the future. Andrew Butt, founder and CEO of iProve, joining us right here on Business Week. Coming up, we're going to talk a little bit about Meta spending big when it comes to AI. Speaking of AI, that's next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher today, back to work Monday, and relative calm return to global financial markets. U.S. stocks climbing, oil lower alongside gold as fears subsided that Israel's war against Iran would escalate into a wider conflict. The S&P was up 56, up 0.9%, finishing the Monday session at 6,033. The Dow up 317, up 0.7%. The Nasdaq Composite Index up 294, up 1.5%. The 10-year at 4.45%, the 2-year ahead of the Wednesday Fed decision at 3.96%. So again, the 10-year 4.45%. Gold down $46 the ounce. Spot gold down 1.4%. West Texas Intermediate crude down 2.1%. 71.46 a barrel on WTI. So it was an up day for the U.S. stock market. Chris Fasciano is chief market strategist at Commonwealth Financial Network, and he was interviewed on Bloomberg Business Week Daily.
You know, this has been a headline-driven market this entire year, right out of the gate, right? Whether it's tariffs, trade policy, the deficit, or geopolitical conflict. And I think what we're seeing today is there have been the stories out there that Iran has reached out to the U.S. and Israel to try to negotiate some kind of deal. So the market's view is that this conflict, which they were very worried about on Friday, looks like it's going to be contained.
Chris Fasciano of Commonwealth Financial Network interviewed right here on Bloomberg Business Week Daily. American Express teasing updates coming later this year to its travel-focused platinum credit cards, announcing what it is calling its largest investment ever in a credit card refresh. American Express today up 2.2%. And 2 New York court officers wounded in a slashing attack at a crowded Manhattan courthouse, which appeared to be a targeted attack on law enforcement. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Meta Platforms taking a 49% stake in Scale AI with Alexander Wang, who's 28 years old, joining Meta as a top executive to build AI superintelligence.
It's a stake, right?
It's a stake.
It's a stake.
S-T-A-K-E.
Yeah, not something you can
not
eat.
Not a steak, an S-T-E-A-K.
Like a steak you put in the ground. Like,
and Carol, it's not an acquisition.
Yeah.
Okay?
If it walks like an acquisition.
Dave Lee says do not call it an acquisition for a host of reasons, okay?
Yeah.
Dave Lee is U.S. technology columnist for Bloomberg Opinion. He spent about 15 years reporting on tech at the FT and BBC before joining Bloomberg. He joins us here in the Bloomberg Interactive Brokers studio. Do we just not call this an acquisition? Like, why are we not why are companies not acquiring things right now?
Because they're afraid to. They're afraid that the courts are going to undo their old acquisitions. So this time they're thinking probably too risky, too complicated. If the stake was 50% as opposed to 49%, that would of course be a takeover rather than an investment. And immediately that would trigger all kinds of reviews. They'd have to wait. They'd have to get clearances not only in the US but also around the world, different regulators. There's no time for that in the AI era. They've got to get to work straight away. And so we're seeing this sort of new approach, which I sort of likened in a column I wrote to sort of when a football team buys a great young prospect. You know, they pay a transfer fee to compensate wherever he's leaving. In this case, for Wang, it's about making investors whole at the Scale AI, the company he founded, and then they bring on this young talent with the view that he's going to be, he's going to run a super intelligence team at Meta, and this is obviously what Mark Zuckerberg thinks is needed to bring his team up to speed and to compete against the other big teams.
He's going to be sitting by Mark Zuckerberg, reportedly. What is superintelligence? What is... And also, Scale AI's not building its own superintelligence either.
It's a new Avenger.
That's what's confusing to me.
So Scale AI is an interesting company. It's kind of right at the very early stages of AI development. It's about hiring humans to do data labeling and say that's a tree, that's a bus, and so forth.
That doesn't sound like superintelligence to me.
No, but the crucial thing, and a colleague, one of my colleagues, Ellen Hewitt, wrote this fantastic piece about Alexander Wang today, sort of talking about how this guy knows everybody in AI, and he knows everything that's going on. And one of the things about Scale AI that makes it particularly useful for Meta is that it's a company that other companies would go to when they needed data. So they were working with OpenAI, they were working with Google, they were working with several other companies. And so they have a bit of an insight into what those companies are working on and what sort of data they were needing to have. So now Mark Zuckerberg gets a bit of that intelligence.
So it's not necessarily we want what you have, we want what you know about what kind of the whole landscape is doing when it comes to AI. What have these companies come to you for?
Yeah, exactly. And also, Alexander Wang is just known as a great networker.
Right.
And so when so much of this AI race is about talent and bringing people on, we're hearing Mark Zuckerberg is emailing people personally and saying, come and join us, I'll give you $10 million if you do it. This is just a signal of how fierce the AI race is.
It's just a different type of signing bonus, right?
Precisely.
That's what it sounds
Precisely.
like, right?
Like a sports star, but considerably bigger in terms of the numbers we're talking about.
What's the promise, though? I mean, what is this super intelligence that they're working toward? What is the world, Dave, that Meta Platforms wants to build and be ready for?
I'm not sure I want to imagine it, frankly, but no, it's
you and me both.
I mean,
man.
Look, there's various names for it now: super intelligence or artificial general intelligence.
Is it fair to say AGI and super intelligence are the same thing?
It's all basically the same goal. This idea that you can create this essentially one machine or one technology that people can use for whatever sort of varied uses they want an AI to do, and there is this feeling that somebody will get there first, right? Now, I'm of the view, personally, that there'll be several players doing this, and that's how the land's gonna turn out. However, I think there is a sort of panic to make sure that we've got to be first or very, very close behind.
To be fair, right, Dave? I mean, Microsoft has done some similar moves, right, to try and position themselves by acquiring, either different people that seem to have certainly some AI insight or know-how. I think Alphabet has done the same thing, right? So they're all kind of jockeying for position.
They're all jockeying for position, and they're also taking the same approach of we can't be seen to be acquiring companies, but we can try and acquire people. Now, I think they're not as clever as they think in this regard. I think the Federal Trade Commission, the Department of Justice, they know what's happening here. They know this is competition just in a different form, because if you've got companies that are spending crazy money on wages, does that mean a smaller company just can't compete for talent? I guess not, right? So there's going to be, and we already know the FTC is looking into some of these deals.
They are already
looking at what they're going to do. Yeah.
What's going on when it comes to innovation at these huge companies? I mean, I read your column and I think to myself, this is turning into like a Pepsi buys Poppy for $2 billion type of thing, because we want to let the startups duke it out for shelf space when it comes to probiotic soda. We're not going to develop it ourselves. Is that happening? I thought the startup ecosystem, I thought there was like, a decade ago, I thought Facebook killed the startup ecosystem.
Well, I mean, look, I guess it's a question of the shifting purpose of the ecosystem to those big companies, right? I mean, it used to be, if you started a startup, you had several exit opportunities. You IPO, you get acquired. Both of those channels have almost been closed off. We're not seeing so many tech companies IPO anymore. That's really dried up, and it's becoming much harder for tech companies to acquire companies at all. But at the same time, the startup ecosystem still has this fantastic ability to work quickly and bring out new ideas. And I wrote in that column you referenced that I'm not sure if Alexander Wang joins Meta as like a junior engineer. I'm not sure he rises through the ranks and becomes this guy. I think that's only something you could do outside of the company, and that's just the nature of startups. And one of the sort of moments of real reflection in Silicon Valley was when OpenAI came along and launched ChatGPT, and everyone's going, well, hold on a second, why? Google's been working on this for years. Microsoft's been doing it. Apple, you'd think would have been doing it, and it just wasn't at all, really. So there is this sort of understanding that the way to incubate a lot of this talent, particularly with AI, which is so talent and engineering driven, it's easier to find that in the ecosystem rather than spend all your own R&D for ideas that might come to nothing.
It's funny, I was thinking about Amazon when they used to just buy all these companies, I feel like kind of almost a catch and kill kind of thing, right? To make sure that they didn't kind of lose out on a marketplace. This sounds like it's kind of catch and not miss out as well when it comes to AI a little bit, right?
I think that's right.
They want to make sure that rather than take something out so that it's not competitive, it's to like, wait, what am I missing with people who really might have some insight into this, just quickly.
I think it's they're not worried that these smaller companies are going to steal their lunch. They're worried that these smaller companies might go and help
somebody else.
Steal their lunch. Yeah.
Date with somebody else, basically, or whatever. Sorry, I don't know why I keep going with like all these little.
Next time Dave's in the studio with us, we will be AGI.
How do you know I'm not already?
Hopefully not. Honestly, hopefully not.
Just like my battery's like going down. Dave Lee, thank you. So I appreciate it. U.S. technology columnist for Bloomberg Opinion. Really good insight into something we've been wanting to talk about a lot, this Meta big investment. It's Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, getting ready to wrap up on the Monday edition. Monday, we can cross it off. Rip it off the calendar.
Hakuna Matata.
Why?
It means no worries.
Oh, no worries.
Yeah.
Be happy.
According to Disney, I don't know if that's
Be
true.
happy.
Yeah.
Right?
I'm at the age. I'm at the age where my kid's telling me about the Lion King that he saw at school, which is a completely different Lion King.
Why is it different?
There's like not like real animal
Is it
Lion
CGI?
King. Yeah.
Is it? Aw.
Completely different Lion King.
That's not, you can't. You know, some things you just don't mess with.
I know.
I'm just saying. You know who we don't mess with? Well,
Red Brown.
Yeah. I'm Carol Masser along with Tim Stanovic. And let's get to Red Brown because we want to take a look at some of the stocks on the move today. Bloomberg News earnings reporter Red Brown. Hey, Red Brown. I know you're worried. You're like, these two are a little strange right now.
It's like If I talk, are they going to make me talk about the Lion King?
You guys said you don't mess with me. So it's fine.
We don't mess with you.
No.
Cody, that was a mover today.
Yes, it was up as much as 13% today on a report that the company was in the early stages, very early stages of exploring a sale. This report came from Women's Wear Daily, citing multiple unnamed industry sources that the company's actually looking to do 2 sales to break up both of its units. And that's probably why the shares are responding so much, is because they have this one very fast-growing luxury fragrance business that's been kind of drugged down by their cosmetics, their kind of their mass market cosmetics. So yeah, you know, that positive reaction probably coming from the fact that you'll be able to unlock a little bit more value by breaking these 2 businesses up, especially considering kind of the trends within the mass market business has been difficult. A lot of competition. A big market would be China as well, and we've kind of seen how the economy and sales, consumer sales, have been doing over there. So yeah, I guess still kind of remains to be seen.
Cody bought Kylie Cosmetics, right? Which is one of the Jenners, you know, Kylie Jenner. What? Come on.
I don't know the answer to that, but I did see.
This was back in 2019.
What? They bought it back then?
Yeah. Don't you remember they bought a 51% stake and it valued it at like $1.2 billion?
I don't know. I don't
know if they still own it.
I saw that there were.
I'm not sure either.
There were vending machines at the airport for Kylie Cosmetics.
I know.
It was like, who? That's crazy.
Do I want a cupcake or
they're
do
vending
I want
machines for
cosmetics?
everything now.
I know. I bought a cupcake from a vending machine.
And?
It was really good.
Okay.
Desperate times.
Yeah, it was
starving. I was coming. I'm like, give me some sugar.
64% down from 2024 highs. The stock has been getting beat up.
Yeah, in a big way. COTY is the ticker.
That's right.
But
I think that might have been what made her a billionaire too.
It's exactly.
Yeah.
It's exactly. Like, it was a big deal when that crossed. See, you know your cosmetic companies.
A little bit of Kardashian trivia, yeah.
That makes me so happy. All right, so let's move on to MGM. What do we got there?
Yeah, another stock in the green today. Shares up around 8%. It's top 5, one of the top 5 best performing stocks in the S&P 500 today. They kind of now flat erased the losses for the year. The reason they jumped is actually has to do with not their casinos, has a lot to do with their sports book in partnership with British Entain. They raised their outlook for that this year, and I kind of think it makes sense. I mean, you probably, this one passes the eye test. Just it feels like sports betting and sports in general everywhere. I don't know if it's just because we're in New York, but yeah, they raised their expectations by around $100 million to $2.6 billion for the year. So yeah, really
Are you a
positive.
sports bettor?
I'm not. I'm really bad at it.
Yeah. Oh, wait. So
Isn't everyone?
Wait. That means you've done it.
I'll do like one a year. I'll do one bet a year on like a big soccer game or something.
That's it.
Aren't the vast majority of people?
Bettor?
No.
You're not a sports bettor.
Aren't the vast majority of people bad at this? Because it's not a
okay.
skill.
It's like gambling. You know the reason their business is because people
Exactly.
lose, right?
I heard the house. I heard the house always wins.
Right?
Well,
you go to Vegas and this stuff is not built because, you know, the people who use the services are the ones making the money.
Exactly.
Well, it's actually interesting. They've been struggling this year a little bit just because people have been winning. So maybe because they're so...
Really?
Yeah, well, I think it's not they're winning. It's just a lot of the favorites have been winning. So if you think like the March Madness tournament, it was like all number 1 seeds made it to the Final Four. So it's like you really don't have to be too much of a savant, I guess. Get that right?
That's a good point. That's interesting, like when the numbers maybe go against the house.
Right. So there's been a little bit of that this year.
Okay, I'm not a savant.
Okay, from there's no easy
Certainly not
segue.
gambling. No, it's like what?
There's no easy segue from going to sports betting or gaming to the defense industry.
No, this is tough.
Yeah,
Lockheed, though, on your radar.
Yeah, Lockheed, along with Northrop, Lockheed ticker is LMT, along with Northrop Grumman and L3 Harris, Technologies, they make up the top 3 stocks that gave up the most ground today. And this is after last week when the shares of this group were up again, kind of on the increased escalation that everyone's been watching in the Middle East. It's kind of interesting. Sell side kind of called this one right when they said, you know, there is going to be this fluctuation, but it's going to be, it's just going to be temporary. This isn't going to be a long-term trend in the shares.
All right, great stuff. Great 3 names, Cody, MGM, and Lockheed. And that, of course, is Bloomberg News earnings reporter Red Brown. Check out our Stock Movers podcast. They are 5-minute episodes. They're the biggest gainers and decliners in the stock market. You can find it on Apple, Spotify, or wherever you get your podcasts.
I'm taking a live shot of looking like things are in Canada. I see UK Prime Minister Keir Starmer, also with US President Donald Trump. They're holding a bilateral meeting on the sidelines of the G7. Let's listen in to what they have to say.
The relationship that we have is fantastic. So
I just want to congratulate you.
But Donald, thank you very much. This now implements on car tariffs and aerospace, our really important agreement. And so this is a very good day for both of our countries, a real sign of strength. So thank you again, Donald. A really important day for both of us.
Great people, great people.
Has anything changed in the agreement since you spoke on the phone in from the Oval Office?
Not much.
No.